to remind us all of something. They need to remind us that the test of policy is economic performance. Sometimes this administration seems to be saying that as long as the 10-year interest rate is coming down, things are going well. Well, the 10-year interest rate fell the fastest during the financial crisis. It fell the fastest after as the 2001 recession was starting. So it fell the fastest at the beginning of COVID. So the idea that somehow trying to get the 10-year rate down fast is some measure of how well you're doing policy, which is another thing we've heard from the administration, I think isn't right. And I hope as he answers questions and talks about things, Chairman Powell can emphasize the centrality of simply trying to have stable economic performance.
Larry, thank you so much for joining us today. It was really important to hear from you. That's Larry Summers, former Secretary of the Treasury, now a special contributor for Wall Street Week. Now, back to you.
All right, that was David Weston speaking with Larry Summers, Bloomberg contributor and former Treasury Secretary, giving some of his thoughts on some of the policies coming out of Washington, D.C. And again, the policy that I think some folks, the news item coming out of D.C. today was Trump says he's increasing Canada's steel and aluminum tariffs to 50%, so we'll stay on top of that. Let's head down to Houston right now. Bloomberg Intelligence co-host Alex Steele speaks with Carlyle Chief Strategy Officer of Energy Pathways, Jeff Curry. Let's go to Alex right now.
Hey, Paul, thanks a lot. Really appreciate it. Jeff, I've been asking CEOs for the last day and a half, what do you do with 25% tariffs? And now it's going to be, what do you do with 50% tariffs? What's going to happen to the market?
Well, it's pricing it in. You know, copper, you know, is heading towards $5 a pound right now. But I think aluminum is the one to really watch, because the question is, can you onshore aluminum production? And the answer is absolutely not. You know, if you think data centers and AI are power intensive, aluminum smelting is in a whole different world. It's 6 times more power intensive per dollar revenue than AI data centers. So if you're already power constrained, there's no possible way you're going to bring all of this aluminum smelting into the United States. So
where do we get most of our aluminum and steel then, the refined products?
Well, a lot of it comes from the hydroelectric power up in Quebec. So it comes down into the U.S. from that. So shutting down that cheap source of aluminum supply and trying to replace it with really expensive domestically produced supply, I think is going to be a tall order to ask.
It's been a tough commodity road in the last couple of weeks as we deal with this volatility, right? Oil was at a 6-month low. That's on recession fears, tariff fears, growth fears, etc. What kind of cycle are we in right now?
Well, I think what we're going through is a huge shift in the global order around security. And I think, you know, what is the response that probably Ontario is going to do to these tariffs? They're probably going to cut power. The governor's already threatened he's going to do it. He cuts power into the U.S. Energy security is top of mind. And I think that's what's going on right now, whether it's in Germany. Actually, Germany, the Norwegians threatened to cut power into Germany back in December when a crisis occurred there. So I think energy security is top of mind for everybody around the world right now.
Okay, so what does that look like? Because what's so interesting about commodities is it'll always clear at a price, right? You'll always buy something. It just depends on what price you'll buy it. Well, is that still true?
Absolutely. And I think what we're going to start to see is that's what's going on with aluminum and copper today is they're going to price in a security premium to make sure you have that supply in your country, domestically protected and duty paid. You're seeing it in gold and you're seeing it across the metal space. And in particularly in energy, we're beginning to see that. And I think that that is going to be the primary driver of the, you know, let's call it the news cycle in commodities.
So it's not geopolitical risk. It's not a green premium. It's a security premium.
Correct.
You're going to pay up to produce this stuff at home.
Yep, exactly.
That's a humongous shift.
Oh, it's huge.
Huge.
And it's going to be really difficult to do, you know, whether or not, and I think the argument we take is it's going to be a diversified set of energies. That's why we call it the new dual order, is because you're going to want oil and gas, you're going to want renewables, nuclear, you're going to want everything, and you want to diversify yourself, because if you lose one of those supplies, you want to be diversified so that you can deal with that disruption. And I think the key point here is when we think about fossil fuels, why do we like fossil fuels so much? Is because they're tradable. They're portable, they're storeable, and they have high energy density, which is why we move them around the world. those same reasons we like them is the same reasons they're so dangerous, because somebody can just take them from you. And so when we think about what's driving, I think, this new environment we're living in, let's call it peak trade instead of, peak. Actually, look at the evolution of peak oil. It started out peak supply, we're going to run out of supply, and then peak demand, we got too much of the stuff, so we need to reduce, the emissions, and now it's peak trade, meaning I can't get my hands on it.
So what's going to be really interesting then is if we get a peace in the Ukraine war, what happens with Germany and Europe in buying Russian gas?
They're going to be hesitant. They'll probably take a little bit. Yeah, they're still buying it, but they're going to diversify their sources. And I think that's the key message here, is diversify your sources so you're not so dependent on one supplier, one type of energy. And I like to point out, what is the best-selling car out there? A PHEV, a plug-in hybrid. Why? Because it operates off oil, gas, solar, wind, nuclear, the entire gambit of all the energy sources. And I think that type of diversity is going to be key in this new dual order.
Okay, so if I'm looking at prices in general, like, does the band move up? Do prices become more volatile? Do they move down? Like if I'm looking at, say, oil or copper, what's my trading band?
I think that the volatility is going to explode across all these markets. You're already seeing it in power and the metals and across the space. That's going to lead to a higher average price. By the way, the volatility then discourages the investment. Because I don't want to invest in this thing, it's too volatile. Lower investment creates more volatility and it just feeds off of itself.
You were one of the first to invent the word super cycle, right? That we have big super cycles, there's big ups, there's big downs, and there's an investment cycle that goes with it. Are we no longer in that?
I think that's a great question. And those super cycles before were created by demand pull, creating big shortages, created these big trends that created that super cycle. This one's a malinvestment cycle. It's industrial policy push, which creates pockets of imbalances. I like to call it, it's like a bubbling cauldron of little mini super cycles everywhere, and you get these high volatility, and that's what we're seeing. By the way, the opportunity for investors in this environment is phenomenal. In fact, one of the themes going around here in CERAWeek is the oil market, these markets are micro bullish but macro bearish. So that micro creates these little opportunities inside there that you can take advantage of, but you don't get that big upward trend. And I think this bubbling cauldron of little supply and demand imbalance is probably the best way to describe it.
Does it change the time horizon for investments or the return for those investments?
When we think about long-term investments, it's going to provide a very similar return, but you got to manage that risk. And I think that's the real, the message here. When we think about, the focus before was on levelized cost of energy, get the LCOE down. We got it down, but we were unable to deliver the joules. So you think about Germany, it got its levelized cost down, but it could only produce the power when the wind blew or the sun shined. Now the focus is on that delivered joule. You can think about now the focus is on ROE instead of LCOE. And so, or again, another way to say it is dispatched power that goes to the consumer as opposed to a centralized production of power.
Okay, fascinating. One more quick question, because you're and it's an oil conference.
Yeah.
What's the lowest price of oil you think we're going to see this year, and what's the highest?
Totally
unfair question.
But I think that's a great question, because about this drill, baby, drill.
Yeah.
We're sitting on the bottom of the cost structure right
Yep.
now. You already see it, drilling's coming off. All the OPEC countries are under pressure. Yeah, maybe you can get down into the low 60s or something like that. I would argue, the market's to the upside. Looking at the amount of investment out there, inventories are low. By the way, and now you put the security premium, people are going to be scrambling to get the barrels, bring it in, and I think that's going to be the key message.
Jeff, always a pleasure.
Great.
Love chatting with you. It's always
Excellent.
good to catch up with you at CERA as well. Jeff Curry, Carlisle Chief Strategy Officer of Energy Pathways. Paul, back to you.
All right, Alex, thank you so much. We appreciate that. Bloomberg Intelligence co-host Alex Steele speaking with Carlisle Chief Strategy Officer of Energy Pathways, Jeff Curry. Tom Keene this morning was saying he felt like the market was waiting for another piece of news to come out of the White House, and I think we got it. Trump says that he's increasing Canada's steel and aluminum tariffs to 50%. We're seeing that in the marketplace. The S&P kind of rolling over here now. It was kind of flattish. Now it's at minus 46 points. That's 0.8%. The Nasdaq's off about 0.6%. So market reaction there. Right now, let's go to Gina Martin Adams, Bloomberg Intelligence Chief Equity Strategist. Gina, what kind of conversation are you having with your clients over the past several days about these markets?
Yeah, so it varies on the client type. I'd say we still focus a lot on the non-domestic opportunities, what the fiscal spending landscape means in the US versus the rest of the world, in particular in Europe and China. That's definitely come up quite a lot. Active managers is something we've been talking a lot about recently as well, because active managers, recall, were really unable to concentrate their portfolio in the Mag 7. So this could be an opportunity for active managers to really shine, given the Mag 7 is down 20%. There's just no way, for instance, that an active manager could have chased the Tesla trend as much as, you know, an independent advisor potentially could have. Thus, they are net beneficiaries when disruptions like this occur in the mega cap stocks. We also talk a lot about how long and how far the trade could go in terms of defensive rotation, where valuations are. I mean, Paul, I could probably go on for 20 minutes as to the nature of the varied conversations we're having, but it's definitely been, the volatility this year is really, I'd say, elevated discussion about the internals of the market and where the best opportunities are emerging amidst this volatility.
What do you make of the endurance of U.S. exceptionalism? Are we seeing cracks?
Yeah, this is something we've been writing about for quite some time. I think, you know, exceptionalism is something of a loaded term, and you first need to define what you mean by exceptionalism. If we're simply talking about the fact that the U.S. equity market dramatically led returns in the global equity markets over the last 2 years, then yes, U.S. exceptionalism is reversing out in 2025. If we're talking about the fact that the U.S. economy since COVID has marginally outperformed the rest of the world, that's up for debate as to whether or not the U.S. economy can pull through in this environment of elevated risk this year, if the U.S. economy can continue to grow at a slightly faster pace than most of the rest of the developed world. That's up for debate. But I do think that the terminology really needs a definition in order to adequately sort of address the issue. But broadly, when U.S. tech is no longer outperforming, U.S. stocks struggle to outperform the rest of the world. And that's the reality that we're facing right now. Also, we have tremendous disruptions emerging out of Washington. We need to account for that in our investment strategy. And those disruptions largely are creating better risk tolerance in emerging markets as well as other developed markets in the global equity market right now.
Boy, that is an important comment there, Gina. I mean, because again, we were, as Isabel was just saying, just 15 minutes ago, we were talking about American exceptionalism, and now we're talking about there's better opportunities in emerging and developing markets vis-a-vis the U.S. How long of an issue do you think that might be? How do you think that's going to play out?
You know, I think this might be a much longer tail issue than people realize. You know, if President Trump, as he claims, is truly committed to tariffs as a primary policy tool, and as we're seeing today, he seems to be pretty committed to this. If tariffs do continue to emerge throughout this year, the companies that will pay the bulk of this cost are U.S. multinational companies. The companies that import into the United States will have to adjust their supply chains. That is a tremendous cost that we need to account for. U.S. margins, of course, have been much higher than rest of world margins in the era of globalization. If we are deglobalizing, if we are going to elevate cost embedded in supply chains that are more global in nature, those multinational companies will pay the price. We're seeing that very clearly play out. At the same time, those companies also had very elevated valuations after the last 2 years of leadership relative to rest of world equities. Those valuations were arguably suggesting a continuation of more of the same, that we would continue to see U.S. operating margins accelerate faster than rest of world operating margins. We would continue to see elevated profitability for U.S. companies. Now we really have to question that. We have to do a lot of homework to figure out which industries, which sectors, which stocks are ultimately going to pay these costs. But nonetheless, U.S. multinationals will pay these costs.
All right, a little sobering analysis there, I think, from Gina Martin Adams. Gina Martin Adams, that's Gina Martin Adams, Chief Equity Strategist for Bloomberg Intelligence, with some a sobering kind of outlook. And again, kind of one of my key takeaways from that discussion was Gina suggesting that there might be better investment opportunities outside of the U.S., where there might be some more certainty and some more investment opportunities than in the U.S. Markets definitely trading off here. S&P 500 off 48 points. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. A day after the market sell-off, S&P 500 now 1% lower. This is down 59 points from its peak. The S&P 500 is down 9.6%, flirting with a correction. The NASDAQ 100, 166 points lower. That is down right now 0.9%, extending its dive into correction territory. A day after the market sell-off, again, sentiment evaporating, especially after President Trump took to social media a short while ago saying he's doubling the tariffs on Canadian steel and aluminum to 50%. Kohl's and Dick's Sporting Goods, they've raised concerns about the U.S. consumer. Kohl's expecting a 6% drop in comp sales this year. Dick's disappointing with its sales forecast as well as its earnings guidance. Kohl's shares right now, they are down 20%. And who knows how this is going to impact consumer spending for people on fixed income. Billionaire presidential advisor Elon Musk calling for entitlement spending cuts, including Social Security. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Isabel and Paul.
All right, John Tucker, thank you so much. We appreciate that. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head on over to youtube.com and search Bloomberg Podcast Live. That's where you'll find us. Alex is down in Houston, and in just a moment, we're going to bring an interview she's going to conduct with the CEO of Total Energies. Citigroup out with an interesting note, just hit my inbox, saying basically, don't buy the dip here. That's coming from Citigroup on their trading desk. So let's head down to Houston, Texas, H-Town, as they say. Bloomberg Intelligence co-host Alex Steele speaks with that was last moment. Speaks with Total Energy CEO Patrick Pouyanné about the French oil company. Let's go to Alex right now. Alex.
All right, thanks so much, Paul. I appreciate it. Right, I'm here with Patrick Pouyanné. He's chairman and CEO of Total Energies. And the amazing thing about Total, it's a European energy company, but it uses its money from oil and gas to do stuff in power and alternative energy. That's a model that not a lot of other companies actually subscribe by. So it's great to get your perspective. Patrick, thank you so much for joining me.
Thank you for welcoming me.
News of the day. We just heard that we have an emergency electricity issue in the United States. President Trump is now declaring 50% tariffs on steel and aluminum imports from Canada. Your reaction to a trade war?
I think it's not. I think this war should, I hope it will end quickly. I think it's better not to have wars, to be honest. Maybe it's a tactic to negotiate. And I think, honestly, all these economies are interconnected. In fact, in North America, in many ways, cars, parts, etc., including, by the way, electricity. Of course, the northeast of the U.S. are receiving electricity from the hydro of Canada for the benefit of the citizens. So there are a lot of issues. I understand also about drugs, migrations. It's not only about trade. So my view is that as a global company, it's better to hope this will be solved quickly. That's all what I can hope, in the benefit of all the parties. And like it was for Trump one, I remember it was a debate at the end. Maybe the shortest would be the better for everybody, including, by the way, for the U.S. economy. So
does it make you think 2 or 3 times about investing in the United States?
No.
Why not?
No, because I'm an energy company. Energy, it's a nice country for energy. You have the cheapest gas, you have oil, we can explore, we can develop. In electricity, a booming market of electricity, you need more electricity.
It's going to cost more now, no?
Yeah, but it's good too. We can build gas plants, cheap gas-fired power plants. We are building also in Texas. We are in Texas today. I have 5 gigawatts of solar plants. It was easy to build here because we have a lot of space. Combining plants with renewables with gas plants is a nice way to produce more electricity. So for me, the U.S. is a large market, and we are ready to invest in the U.S. I understand that. The only point is that if we need to reshore, for example, all the solar panels that we use on our renewable fields, why not? It's just a little more expensive, so the customers will have to pay somewhere.
So not you, but the end market.
Yeah.
Okay, but then let's just tackle, say, offshore wind for a second in the
Offshore
US.
wind, I put it on a pause.
Yeah, a pause or like the garbage pile?
No, not garbage,
Okay.
pause. We got a concession for 50 years.
Okay.
So I understand during these next 4 years, no way to obtain any federal license. So I don't want to spend my time to lose my time. My teams, I don't need to pay money to spend money for that. So we say no, we put a pause. We have reduced our teams to minimum. And then 4 years, we'll see if federal government policies are changed.
Are you worried about any existing leases that you currently have and operating for wind and solar? I was talking to the Secretary of the Interior who didn't rule that out yesterday.
No, to do what?
To take away those leases.
To take away the leases.
Yes.
But the leases, you can manage that on federal land, so I check. I have no leases on federal lands. And by the way, in Texas, there is no federal lands almost, so no, we make our due diligence, so we are fine.
Okay.
And I think, honestly, when I discuss, by the way, Elon Musk is a big fan of solar and batteries for good reasons. So I think, and we will see the debate, I'm sure the debate at the Congress and the Senate will be interested with the reconciliation bill. So that's clear, but for the time being, we'll wait to see what are the new fiscal conditions to develop solar in the US. But you know, there are a lot of red states where we develop renewables. And again, what's the priority for the Trump administration is we want more electricity for AI, for data centers. It's all of the above, more electricity. It's gas, it could be nuclear, but it could be also renewables with batteries. So I'm optimistic. I think at the end, common sense in the US, what we've observed, at the end, business interests are always respected. And you have fundamentally, the Trump administration is very business friendly. So why not for energy, which is at the core of all their program for growth?
Okay.
So I'm optimistic.
Globally, though, I mean, we're looking at stocks taking a hit. The sentiment's not great. There are worries about recession either in the U.S. or elsewhere because of tariffs. Are you seeing any indication of that?
Yeah, but what? Because you know what people hate? It's uncertainty. What has been created is uncertainty with all these tariff wars. So suddenly we don't like the markets, the stock markets do not like. We don't know where we go. So putting the chaos is a nice way to negotiate. I can use it myself from time to time. I'm not a big head. I'm not sure I'm obtaining the good results, but short chaos, please. That's all. But the markets are saying to the administration, we don't like uncertainty. We are changing the world. Where do we go? So I think the shortest will be the better for all the interests, including fundamentally for the U.S. economy. And I'm sure that President Trump and his administration are very led by the unhealthy U.S. economy, which was not too bad, in fact. So stop this uncertainty. That's, I think, the best thing to do in order to avoid a recession and things which, honestly, the U.S. economy should not get.
Again, though, globally, for China, for example, if China puts a tariff on U.S. LNG, that does directly impact your business. You're a huge gas and LNG trader. So how does
it does not impact?
How
I will
not?
tell you.
Why not? Doesn't it
I will
just
tell you
change
why.
flows?
Because
Tell
the
me.
Chinese are smart. If they choose that product, it's because it has a little impact. Because in fact, a company like Total, we produce LNG, 40 million tons in 12 countries. So yes, my LNG from the US will not go to China because there is a tariff, but I will use the LNG from Qatar or from Australia to go to China. So in fact, we made the analysis, the impact on China is very minimum, almost nothing. And for you, honestly, today, for us, we are the largest exporter of US LNG, more than 10 million tons. Our primary market is more Europe today. So, and we send the Europe, which is fitting, by the way, exactly with the Trump administration policy to expand the business, the trade, or the trade with Europe through energy, and in particular energy.
What happens, though, if there's peace in Ukraine and Europe starts buying Russian gas more?
We'll see. First, we need to have peace. Second, we need to see if Europeans will buy more Russian gas.
Any indication that they might from where you sit?
I think, you know, it's not an easy, it will be a debate between economy and geopolitics. Economically, for sure, Russian gas is cheaper, so it was part of the competitiveness of the German industry. Politically, I think it's still will be a big debate to see if we take back some gas. Yes, we'll take some Russian gas, but surely not at the same level than before the war. The over-dependency from Europe to Russian gas, I think this era is over. We will be in between. It will not be zero. It will not be 150 BCM per year, maybe half of it, 80. And so that means that still we will need more LNG after the peace than we were using LNG before the war. So for the US LNG, it is a growing market.
And also, you have Germany that's trying to pass money to be able to rearm and reindustrialize.
Yeah.
What kind of demand do you, like, what's your opportunity set there if that really comes to pass?
But I think Germany is a very strong market for us. We love it because the Germans in electricity have decided to get out, no nuclear, get out of coal. So it will be a mix of gas plants. We need to build 20 gigawatts of gas-fired power plants and renewables. Exactly our strategy. So there is for us, we have invested in the last 2 years strongly in Germany to build what we call our integrated power business. So I think, yeah, Germany, and it's true as well, but we need to reindustrialize. We need to produce more weapons in Europe, for sure, in order to be more independent somewhere. And because the message from the US is clear,
yes.
We need to take ourselves, our future in our hands. So that's good for globally for the economy and the industry.
So what's on your M&A list right now?
My M&A list?
Yeah, are you going to buy something for that? There's a lot of opportunity.
First, we have a huge organic growth. I have 5% in front of me for the next 5 years. Now we have been clear that we want to, in particular, to build a larger gas business, production business in the US. So we made some M&A deals last year. Maybe there is more to come because I need to increase my gas production in the US.
But bolt-ons or bigger deals?
Bolt-ons is fine. It depends. Opportunities. It's a matter of, to make good M&As, it's good to be counter-cyclical. So I will not announce that today at your...
When natural gas prices are at over $4? Okay, fine. So next time.
So I need to
do that.
wait.
You have to wait. Okay, I get that. Is this also a good time to get out of certain assets that aren't working for you? Say, is Vaca Muerta maybe on the list?
Yeah, last year, one of our peers has done a very good deal. You know, Argentina, we are the strongest gas producer in Argentina. We have also some shale oil. We are not very keen to develop the shale oil for different reasons. And so last year, one of our peers has done a very good M&A. So yes, I'm ready to, at the same price than one of our colleagues, I'm ready to divest my shale oil production license in Argentina. That's part of the divestment. But you know, we have been...
Are you getting close to that or not yet?
I don't know. We have processes there.
Oh,
there is a process.
Some news. Okay, all right.
No, it's not good news.
All right, let's go to one other area that we want to make some news. So Mozambique, LNG. I know you've been working very, very hard on that project to get it restarted. You need reapproval from the U.S. Import-Export Bank for a $4.7 billion loan. How's that going?
I think it's progressing. First, this was approved under Trump 1 administration. So it's a contract which has been signed. I just would like to remember. And I believe in rule of law fundamentally. The contract exists. What happened is that in 21, we had to declare force majeure because there were some security events. We had to stop and so it's just a matter to amend this contract to put a new completion date in 2030 to reflect the fact that between 21 and 24, we are forced to stop. That's what we want, the amendment. So it's not a big amendment. You know the debate. I think now you have a functional U.S. exim. President Trump has decided to put in place a new board. So we'll see, but I'm optimistic that...
Months, years, days, hours?
Months.
Okay, months.
I don't know. No, but fundamentally, I think, honestly, there is no more debate with this administration. The mandate of U.S. Exim is to be neutral in terms of support. In fact, why U.S. Exim is supporting us? Because most of the contracts have been awarded to U.S. companies, U.S. contractors. This project represents 16,000 jobs in the U.S. That's why U.S. Exim is supporting it. We inherited the project from Anadarko. We are not a U.S. company, but we kept all the U.S. contractors. And that is the driver behind which supports U.S. Exim. It's not Total Energies. It's fundamentally the support of U.S. Exim is an export credit supporting the fact that we have awarded more than 40% of the contracts to U.S. contractors, which are all asking me, please restart, because we have the jobs. And they have written to all their congressmen, to all their... This is for what? This is the reason why we can be also pro-U.S. industry when we invest abroad, when we give jobs to U.S. companies. And this is the reason why I think U.S. Exim will honor his word for a simple reason. It's not because it's LNG, it's just because it's U.S. jobs. Yeah. That's the fundamental reason.
It's a good pitch. So you're 100% confident that money's going to come your way?
Yeah, I'm 100% confident.
100% confident, okay.
I'm 100% confident.
Patrick, it's a real pleasure. I love speaking with you. Thank you so very much for joining me. I really appreciate it. Patrick Pouyanné, Chairman and CEO of Total Energies. Paul, I'll send it back to you.
All right, Alex, thank you so much. We appreciate that. That's Bloomberg Intelligence co-host Alex Steele speaking with Total Energy CEO Patrick Pouyanné on the global oil and gas business down there in Houston, Texas. The news of the day is more tariff news coming out of Washington, D.C. President Trump raising the tariff on Canadian steel and aluminum from our good friends, I like to think, still in Canada, and that is certainly rolling in the markets. S&P is off 0.6%. The Nasdaq's off 0.25%. We're going to break down with a couple of experts over the next couple of segments. Let's go right to Joe Doe. He covers all the metals and mining for Bloomberg News. Joe, how much aluminum do we get from Canada? I know it's a big deal for them. Right. Is it a big deal for us as consumers?
Yeah, it's massive. Okay. One of the numbers that we ran out, and Richard can probably get this a little closer, but it's something around 70% of the aluminum consumed in the United States per year is produced in Canada.
Oh, boy. Oh, boy. All right. So what's the feeling here within the industry about what's happening, how the industry might react?
I think at this point, there's quite a bit of confusion within industry. I mean, we don't know for sure, but it's not clear that the President of the United States had at least telegraphed that he might be going to double the aluminum and steel tariffs. So you're probably having a lot of chatter around boardrooms at places like Ford and Molson Coors and Budweiser and Coca-Cola.
I want to bring in Richard Bork. He covers the metals and mining stocks for Bloomberg Intelligence. Richard, give us a number on kind of how material this is in terms of how much aluminum do we, in fact, steel, all that stuff, do we get from Canada?
Okay, so Canada is the #1 exporter of aluminum, as Joe mentioned. They're also the #1 exporter of steel to the U.S. Aluminum, it's a much bigger problem because the U.S. doesn't have the capability to produce aluminum because our electricity is #1 cost to produce aluminum. We're not competitive on electrical energy costs, so therefore we need to import aluminum. On steel, on the other hand, the U.S. imports about 20% of its steel needs. Our analysis shows that maybe a third of that is steel that the U.S. producers don't want to produce or maybe can't produce. So therefore, with the current industry utilization at around 75%, they can ramp up and cover any shortfall, on steel. Aluminum, we don't have that capability.
Ryan Grabrinsky of Strategas said, another day, another tariff announcement. How seriously should we take this? I mean, markets are reacting as we've seen the whiplash the past weeks, but when do we know if it's the, quote, real deal?
Well, that's the $24 question that everybody's asking. This one sounds like it was in response to Canada coming with a 25% energy tariff. So I could see it, if Canada rolls back their tariff, the U.S. rolls back, maybe back down to 25%.
Hey, Joe, so you mentioned kind of the people that actually use aluminum, whether it's making a can for beer or soda. Are we hearing anything from just those types of people? Because those are the ones that are going to have to deal with it as well.
Yeah, I mean, the packaging companies in particular are a little more careful because there's a lot more competition there. Like the first time around, I remember hearing from one of the big beer companies saying, Joe, if we raise the price of, a 12-pack or a 6-pack of beers, the other company would come in and eat our lunch for it, right? However, I was saying earlier with Richard on another segment, the Ford CEO came out a month ago and said, these tariffs will blow a hole through the industry. So I think you are starting to hear more CEOs actually be a bit more aggressive with what they're saying. Now, partly that is because of the bigger concerns that go beyond just metal tariffs. Mexico and Canada tariffs would be absolutely difficult to handle. But yeah, I think you're hearing it from them.
Rich, 30 seconds. What if any of the companies reacted yet so far today?
We haven't, Alcoa on their latest call had kind of outlined a scenario what they saw would happen. And what they saw happen is they would shift their production to Europe or shift their shipments to Europe, and they expect a lower tariff country to come in and backfill what they didn't do to the U.S.
Okay. All right. Appreciate getting both of you guys. Joe Doe covers metals and mining for Bloomberg News. Richard Bork covers it from Bloomberg Intelligence side, looking at the companies here. So again, the news, President Trump doubling the tariff on Canadian steel and aluminum. to 50%. A bigger issue for aluminum is what we're learning here. We'll have more reporting on that. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to get the latest from the markets. Vince Signorella from Bloomberg News. He talks to traders all day across all different asset classes. He'll give a sense of what we're seeing out there. We do have accelerating across the equity markets. All the latest reporting there. We'll go back down to Houston, Texas. Alex Steele speaking with Toby Rice, CEO of EQT. She's also going to be speaking with Williams CEO Alan Armstrong. So we got a lot coming out of Houston on the global energy space. We're also going to speak to Alyssa Corcoran, Deputy Chief Investment Officer for Copernic Global Investors, to get her thoughts on these markets. Anurag Rana, Bloomberg Intelligence technology analyst. She's going to recap Oracle earnings and look ahead to Adobe, kind of get it back on some of this earnings analysis, despite the fact that it's a lot of noise, a lot of news coming out of Washington, D.C. as it relates to tariffs. Let's get a recap right now. We'll go to Charlie Pella for a Bloomberg Business Flash.
Thank you very much, Paul Sweeney. Indeed, Trump Tariff Tuesday, stocks slumping again, recapping and resetting here. President Trump says he is increasing the steel and aluminum tariff on Canadian goods to 50% and will retaliate against Ontario's move to place a levy on electricity imported from the United States. Stocks are selling off again. We are at the lows of the day right now on the S&P, down 51, 55, 62 where we stand right now. That is a drop of 0.9%. Dow Industrials also declining, with the Dow right now down 564. On the Dow, a drop right now of 1.4%. NASDAQ slumping by another 0.6%. The NASDAQ 100 index also down 0.6%. The 10-year 4.20%, with the 2-year currently yielding 3.88%. Spot gold now up 1%, 29.16 the ounce. West Texas Intermediate crude oil up 1%, 66.66 now on WTI, and Bitcoin up 1%, 80,013 right now on Bitcoin. So given the news between last night and today about the airlines and retailers including Kohl's and Dick's, what about the U.S. consumer? Sarah House is senior economist at Wells Fargo Bank. She was a guest this morning on Surveillance.
Really, we're seeing, I think, the consumer becoming more stretched, and I think seeing that play out in some of the more recent earnings reports, where activity is also potentially, I think, going to be more sensitive to some of the higher prices that we could see from tariffs, but having that be to the detriment of some service sectors.
Sarah House of Wells Fargo Bank interviewed this morning on Surveillance. Kohl's and Dick's Sporting Goods both lower after earnings. Right now we have got Dick's down by 5.3%. Kohl's is plunging 20.3%. Keep it locked into Bloomberg Radio for the very latest on tariffs and market reaction. Again, the S&P down 53, drop there of 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pella, thank you so much. We appreciate that. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast Live, and that's kind of where you will find us. Markets rolling over here on the heels of this news about increased tariffs on Canadian steel and aluminum, as Charlie was just reporting. Sell-off accelerates here in the equity markets. Let's check on Vince Signorella. His job at Bloomberg News is just to talk to traders all over the street and get a sense of where markets are heading. Vince, another kind of day. We had futures in the morning, kind of struggling for a little bit of a bounce here, and then we got the news coming out of Washington about this hike in tariffs on Canadian steel and aluminum. That's all the markets needed to roll over. What are you seeing out there?
Seeing a pretty lousy tape, to be honest with you. It's still looking pretty heavy. We're, as Charlie just mentioned, near the lows of the day, down 1% in the S&P cash. Every rally seems to be met with sellers at this point. I don't know that people are comfortable with risk, tariffs just. Tariffs are going to keep coming. There's no doubt about it. He's accelerating the situation with Canada. They're still in talks with Mexico. We'll see how that plays out. We may have a similar situation with Mexico if those talks don't go well. And Europe is just around the corner. Trump's really got it for the Europeans with their the fines that they keep levying on tech companies, and tariffs are going to be his answer for that as well.
Vince, you're a veteran in this space and have covered several cycles. Has anything jumped out to you in this particular round?
So this particular cycle, I think, is very, very different. When we've looked at tariffs in the past, we've looked at situations like this in the past. It's always been some sort of situation where we think a foreign government is maybe dumping a product, and so we put tariffs on it to limit its entry into the country. This is something completely different, where the president and the Treasury Secretary have both mentioned they're trying to reset the U.S. economy away from an import economy and a services economy, or at least balance it with services towards manufacturing. And he's hell-bent on lowering the trade deficit with countries where it appears that we have a large trade deficit. And obviously China is one, Canada is another to some extent, if you take oil out of the picture. And of course Mexico and Europe, and he's looking to turn this $1 trillion deficit around, and he's going to do it with tariffs, and that is going to be a story of the day. That is a cycle that we're going to have to get used to, and they both said there are going to be shocks that we have to deal with, and I think we're starting to see it.
So, Vince, I was just quoting from Stuart Kaiser over at Citi on the equity trading desk. He's out with a note to his client saying, it's still not time to buy the dip here. So is there any sense that people are looking for a bottom here, maybe just not seeing it? Are there any telltale signs of when bottoms may be putting in for some of these asset classes?
It doesn't look like at the moment. I mean, there are opportunities that we saw yesterday. We triggered at yesterday's low some huge buy program that went through and paired the losses, some of the losses for the day. And I think that's just what we're seeing is some kind of like the day trade kind of thing going on, where we get to extremes. So yesterday, the RSI, the relative strength, was at levels on the lows of oversold for the S&P that we haven't seen since the pandemic. And that definitely triggered some buys. I think if you see things like that again, you see the RSI trade down toward 28. It's probably going to trip a program trade, and we'll see some buys. But in general, I think the market is still feeling that at this juncture, rallies are a sell, dips are not a buy.
All right, Vince Signorello, thank you so much. We appreciate that. Vince Signorello, market strategist for Bloomberg News. Well, yesterday, Toby Rice, CEO of EQT, spoke with Bloomberg Intelligence co-host Alex Steele about the impact of tariffs on energy investments down at CERAWeek in Houston. Let's take a listen.
So for our business, surprisingly, from a cost perspective, doesn't have a material impact on our costs. But when you step back and you look at energy as a whole, tariffs on a country like, say, Canada would actually be bullish on natural gas prices here domestically. So that's a big
why? Because more demand?
Because of the fact that Canada imports so much gas into the United States, which would have tariffs, which would lift the price of natural gas here domestically. But from a minor amount, I mean, if you think about it, gas prices are $4.50. That's the energy equivalent of, call it, $30 a barrel. So, I mean, natural gas still is the most cost-effective energy solution, but tariffs are certainly a big theme of the conversations we're hearing this week.
But some oil services say, look, if you're looking at shale and you're going to drill a well, like it could really increase those costs to actually get more oil or get more gas out of the ground. True for you guys?
Absolutely. That definitely is an issue for people that are playing the spot market for their services and looking to gauge their activity levels based on the current commodity price. At EQT, we take a much more long-term, steady focus on our activity levels. And because of the fact we've contracted so much of our services, we've insulated the impact of these tariffs, but they are going to be felt by others playing the spot market.
Unleashing American energy is a cornerstone of the Trump administration. Ooh. You have been saying that for a very long time.
Yes.
Also, when we talk about unleashing, do you interpret that to mean unleashing oil or unleashing gas?
All of it.
Okay.
Unleash all American energy. I mean, Alex, we are in a place right now in this country where we are producing record amounts of energy. If you added up the oil and the gas that's being produced today, it's over 30 million barrels a day of energy, okay? But here's the challenge. People are scratching their heads at home because Americans have seen their energy bills increase over 35%. How can we live in a world where energy production is up, but prices are still going up? And the answer is quite simply because political force has overwhelmed market forces, and that's made it incredibly difficult for the market forces to work. And that means we see big disconnects between where energy is produced and where it's consumed. I'm selling gas in Appalachia today for $4, and in Boston they're paying $15. There's an incredible opportunity for us to get ourselves out of this. It's not about drill, baby, drill. It's about build, baby, build. And that needs to be the mantra that's going to unleash American energy and unleash energy dominance here in this country, which is going to lower energy bills for American and strengthen our energy security.
And by build, you're basically talking about pipelines. Like the reason why people in Boston are paying $15 is because there's no pipeline that's going to get gas efficiently there. Do you think we're going to get East Coast pipeline? Would you bet money on that?
Well, you know, you look at the headlines last couple weeks, the Trump administration has already thrown support behind the Constitution pipeline, which could bring up to a BCF a day of natural gas. That was one of the travesties that has happened in the past. It was one of the pipelines that was blocked, canceled, or opposed. So for the fact that this administration is putting focus on that, I'm optimistic. But it's not just going to be executive order or political support that's going to make this happen. We need to see real permit reform, in addition to legislative reform, to give our pipeliners the confidence to get these projects built, because the market is screaming.
In 4 years. Got to get built in 4 years. Like that's a tough road.
Yeah, hopefully the legislation reform, the permit reform that takes place will include some litigation reform that will prevent people from actually going back and trying to vacate permits for assets that are already built. I mean, this is the type of situation that's happened in this country. Imagine a pipeline company getting their permits, starting construction, and then having their permits yanked away from them.
Yeah.
Okay? That's exactly what happened with Mountain Valley Pipeline, one of the most controversial pipelines in this country. And that's an asset that EQT owns today. And for people that maybe say, hey, we don't need these pipelines, well, let me tell you what's happened on that pipeline this last winter. That pipeline that people have said is not necessary for this country's energy security had flowed at max capacity, over 2 BCF a day. And here's a shocker.
Yeah.
The price at the tailpipe of that pipeline reached over $35 per MCF. What would have happened if that pipeline was not built? Clearly, there's a sign that we need to get more infrastructure built. And if you think it's hard to get a pipeline built, understand this, it's hard to get a transmission line built. It's hard to get an oil and gas location built. It's hard to get a 5,000-acre solar facility or wind farm. I don't care what type of energy you're building. It's gotten incredibly difficult to get things built in this country. That's why, to get out of this, we need to get back to letting market forces rule and build, baby, build.
Okay, so that's the pitch. I get that. The other side of it is not only to get, say, gas to the East Coast, but also to get our gas out of the U.S. and export it in the form of LNG. You're going to need a pipeline from the Haynesville to get to the Gulf Coast. Does it happen?
There is going to be some more opportunities that people are looking at, leveraging existing assets that we have. It's one of the questions that I think a lot of pipeline operators are looking at is the right-of-ways that we've already established. What is the extra capacity that we can put inside those right-of-ways? You know, the environmental disturbance from creating a right-of-way can be muted when you're using existing corridors that have already been created. That can be an opportunity, but the theme isn't just the three themes I look at it when it comes to natural gas. One, continuing to evolve our energy systems using natural gas to replace coal. Two is this LNG theme that's taking place. And the third big theme that's taking place is with AI. So there's a really amazing opportunity for natural gas in the future.
But currently you can't benefit off of the LNG export trade right now, right? Because you need your gas to get there.
Well, as America's largest natural gas, America's natural gas champion, EQT, we sell our gas all over the country. And so to the Gulf Coast specifically, we move about 1.3 BCF a day of our product down to the Gulf Coast. About 800 million a day of that is going to the LNG corridor. So we do have access to that market, and we are excited about the America's ability to continue to supply LNG to the world and help them lower their global emissions and also provide them energy security at the same time.
You also brought up AI and power demand. How are you guys going to play in that space? What are conversations like? It feels like it's not just independent power players. It's now regulated utilities. It's also energy companies that are now trying to become power companies in essence. What are your convos like?
So AI is the thing that everybody's talking about, whether you're at an energy conference or any conference, people are talking about AI. Just remember, it's only been 12 months since people really started saying this is going to be a big deal. So in less than 12 months, we've seen the momentum for AI only continue to strengthen. How big could this be? There's a lot of wide ranges. Some people are saying 50 gigawatts or 75 gigawatts. That's, people are basically saying between 10 or 15 New York cities, power to feed New York cities. This is a really big deal. We're seeing some technology investors come into EQT that have estimates that we're going to see 175 gigawatts of power demand when you do the buildup on how many chips. So,
but how do you play in that right now?
Well, right now, EQT, about a third of our natural gas in this country is used for power generation. So we've consistently seen year over year higher and higher natural gas utilization to meet power. So when you're talking about AI, you're talking about power, you're talking about natural gas. The evolution that's taken place over the last 12 months, people have questioned, say, well, how will natural gas meet this power demand? Will they play a role? Well, 12 months ago, people were thinking they were going to be able to meet that security or meet that demand with renewables. We've moved past that. Then they looked to nuclear and realized it's hard to get nuclear built. It's probably going to meet the time ambitions that they have. And so now they've moved to natural gas, which is the most cost-effective, most reliable form of power generation. And most importantly, it's the fastest speed to market. And we think those attributes are going to allow natural gas to take the lion's share of the power gen that's coming.
All right, that was Bloomberg Intelligence co-host Alex Steele speaking with Toby Rice, the CEO of EQT down at CERAWeek down in Houston. And my takeaway was not so much drill baby drill, but build baby build. So that's kind of a takeaway there. We need more pipelines to get the energy that we do produce to where it needs to be.
It's actually great. I'm learning a lot just watching Alex's interview. I mean, this is a space that's very important and crucial to the economy, but I think doesn't really get a lot of headlines. Not like the S&P.
Yeah, exactly. So the energy business is front and center down there in Houston, Texas. And again, the EQT, they have a lot of oil and gas coming out of their shale areas, but the challenge in some markets is to get it efficiently to where it needs to be, whether it is via pipeline to the East Coast or down to the Gulf for export LNG market. So again, great stuff there. We'll have more from Alex from Houston later this hour as well. Let's get a quick little look at the markets here. That we are off the lows of the day. That's the good news. The bad news, I'm still showing some red and green on the screen here. The S&P is off about 0.4%. The Dow is off about 0.8%. But the NASDAQ turning positive here, up about 28 points. That's 0.1%. So the initial shock of the additional tariffs on Canadian steel and aluminum wearing off a little bit on these markets. We're starting to see a little bit of a footing, a little bit of a bounce back. We will have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. Now, see if your company qualifies at oracle.com/Bloomberg. The Dow, the S&P, they are both lower. NASDAQ higher since our last update, up 12 right now, up just under 0.1%, but the S&P down 25, now at 55.89 on the S&P 500 index. That is a drop right now of just about 0.5%. The Dow down 406, down 1%. Stocks are buckling again after Donald Trump's latest trade war salvo against Canada. The 10-year 4.24%, with the 2-year currently yielding 3.90%. Gold up $27 the ounce, $29.15, up 0.9%. West Texas Intermediate crude 66.62 a barrel on WTI, up 0.9%. And Bitcoin now surging by 2.1%, 80,986 on Bitcoin. End of an era at Southwest Airlines. Southwest will begin charging passengers for some checked luggage, ending a bag-free policy that has been a hallmark of the carrier since its founding more than 5 decades ago. Southwest Airlines shares, they're up today by 6.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube. Head over to youtube.com and search Bloomberg Podcast Live, and that's where you'll find us. As Charlie was just reporting, kind of red and green on the screen here. Now we've got the NASDAQ negative. So, again, some selling pressure out there in the marketplace post more tariff news coming out. Alyssa Corcoran joins us, Deputy Chief Investment Officer for Kopernik Global Investors, I believe via Zoom from Tampa, Florida. So not bad down there with the Yankees in spring training. Alyssa, thanks so much for joining us here. How do you, as a professional money manager, navigate a world that's driven maybe not so much by earnings fundamentals, but more by geopolitical and trade policy emanating from the White House? How do you navigate that?
Yeah, it's great to be here, Paul. Thank you. I mean, navigating the markets is what we're paid to do, and really it's navigating uncertainty. And I think that investors forget that the future is unknown, and that uncertainty is just part of investing. And during bull markets, they're more confident about the future, and to the point where they bid up assets so that the future needs to be like the recent past. Otherwise, you get these big corrections. So we think that there's actually a better way to do that. Instead of predicting markets, instead of trying to predict the future, it's really just building a portfolio that's resilient to shocks, because you don't know when shocks are going to happen. We didn't know that COVID was going to happen. We didn't ever think that we'd be in this trade war with Canada. So, we think that the way you do that is you build this anti-fragile portfolio by diversifying. You want to own different companies, you want to own different countries, you want to own different sectors, and then also demanding that you buy mispriced assets with a lot of asymmetry and positive asymmetry, and make sure that you have that margin of safety so that you can absorb shocks.
On those mispriced assets, where are you seeing bargains?
Yeah, thankfully, the market is very bifurcated. I mean, the U.S. has sucked away all the attention and basically all the money. So much money has flown into passive strategies that basically anything that is outside an index is very inexpensive, and it's active hunting grounds for active investors. Real assets are another area that's significantly mispriced. I mean, gold miners makes up a big part of our portfolio, and really when you look back, gold miners are down 40% since 2011, while gold is up 80%. So the market is still not loving gold miners, and we see a lot of opportunities, especially the ones that are not producing. They have these big, huge gold reserves, but it will require a lot of capex to bring those on. So we have the streamers, we have the producers, we have the junior mining companies that own assets. Outside of real assets, you have South Korea, which is extremely inexpensive, and now it makes up almost 18% of our portfolio. This is a country that is the whole Kospi index is trading at the same price it was in 2006. And meanwhile, the economy has grown significantly since that time. There's a lot of opportunities in South Korea, conglomerates, telecom companies, things that are domestically oriented that maybe aren't going to be impacted by the tariffs.
So how do you think about the gold miners? What do you think is being mispriced by the marketplace? Again, with, they're down 40% from their high, while gold is up 80%.
Yeah, it's very interesting, and I don't know exactly the answer. What I think is happening is that gold miners have been in a very, very long bear market. And the longer that bear market goes on, the longer it takes investors to come around to these stocks. People got very, very hurt when gold started crashing, after 2011. And so that we're just starting to see the early innings of a bull market, excuse me. And so we are seeing some M&A, but the M&A is happening between the producers. So the Barracks, Newmont bought Newcrest. These are big companies that are already producing. What we haven't quite seen yet is the producers buying the land packages or buying the companies that just own the assets. Investors still don't want them to see the producers putting a lot of money into the ground.
More broadly,
so that will eventually happen.
More broadly, do you think this bearishness is warranted, or is this a healthy pullback, especially in high-valued momentum assets like tech and even speculative ones like Bitcoin?
I mean, I think that the U.S. has been extremely expensive, and this recent pullback in the U.S. stock market, I think, is very warranted. I mean, they were overpriced, and people have basically been buying stocks price agnostic. I mean, they've just been buying the index. They've been buying momentum strategy. So I do think that this is warranted, but more specifically to the gold mining stocks, I don't think that is warranted. I think that the gold miners, they've had management teams that have not done the best things, but they are overly discounted. And that is also a theme that we see with markets. Investors can get overly optimistic and they can get overly pessimistic. So thankfully, there are a lot of opportunities where investors are overly pessimistic.
All right, Alyssa, thank you so much for joining us. Alyssa Corcoran, she is the Deputy Chief Investment Officer for Kopernik Global Investors based down there in Tampa, Florida, talking about some of these, maybe some of the areas we don't talk about a lot, the gold miners, for example, and South Korea she sees as a country offering some value. All right, let's head down to Houston once again. Bloomberg Intelligence co-host Alex Steele speaks with Williams CEO of Alan Armstrong. Take it away.
All right, thanks so much, Paul. That's right. I'm here with Alan Armstrong, CEO of Williams. Williams is one of the largest natural gas infrastructure companies in the United States. Great to see you. Thank you for joining me.
Glad to be here. Thank you.
The news of the last hour is that President Trump is increasing tariffs on steel and aluminum imports from Canada to 50%. What does that do to your business?
Well, we have a number of suppliers. The large diameter pipeline business, a lot of European suppliers, Korean suppliers for that space as well. So, the market will have to react to that. Certainly, though, something that companies will have to react to and respond to in terms of their supply chain. It's always been a great relationship with Canada, as a supplier, particularly in the steel into the energy business and the large diameter pipeline. So a lot of people don't appreciate, the fact that the steel pipe making process involves making the plate steel and then converting that into large diameter pipeline. A lot of capacity here in the U.S. for smaller diameter steel products like is used in the drilling and in the production area. But when you get to large diameter pipeline, pretty limited capacity here in the U.S.
I'm assuming capacity to be built would be quite difficult.
Right, and takes a while to gear that up, and a lot of those mills are already booked out pretty far. So But the good news is, you know, a lot of really good suppliers in Europe that we've always used as Williams.
Well, those tariffs are coming, though, I'm sure.
Yeah, so we'll see. I mean, I think, you know, the
But
administration.
are you currently laying pipe right now in the ground where this would be an immediate issue, or
We've already, I mean,
out?
anywhere we've got a project like that, we've already bought the steel well in advance, and we line those up well in advance. So it's not a situation where we've got pipe coming across the border and we're gonna have to figure out how the tariffs work. So most of our pipe gets bought. You know, we contract the business. Once it's contracted, then we go buy the pipe. And so, you know, the kind of ironic thing about that is because our permitting processes take so long here in the U.S., that we have plenty of time, unfortunately, to go buy the pipe while we're working on the permitting.
So the theme here, the administration, originally it was sort of drill, baby, drill, but the theme here among CEOs is build, baby, build, which is 100% up your alley and in your business. What are the biggest hurdles? Like, is it permitting? Is it going to be sourcing? Is it labor?
Yeah, no, I mean, it is first and foremost permitting in the markets that we serve. We serve some of the more heavily populated areas like Seattle, Portland markets, New York, New Jersey, provide supplies up into New England and all along the eastern seaboard. So areas that have a lot of data center load right now going on, and as well as some big projects here in the Gulf Coast area serving LNG market. So we've got a 42-inch pipeline right now that is being built from the Haynesville down into the tying into our Transco system, large diameter pipeline. So we've got a lot of big projects going on, but truly, when you get into the Northeast, the state's ability to block pipelines has been pretty chronic, particularly in the New York City into New York City, like, you know, Governor Cuomo blocked 2 of our big pipelines. The outcome of that is $98 natural gas in the winter this year into New York City, which is going to result in...
Can the federal government fix that if that's a state issue?
If the federal government, I would say that I think what's going to fix that is people being really upset about their utility bills.
Yeah.
And, you know, you saw a
Summer
couple...
can be tough.
Yeah, so you saw a couple of weeks ago where Governor Hochul actually went out in support of the Iroquois pipeline expansion into Long Island, and she recognized that it was because customers on the Con Ed system, while they were providing low-income assistance for people's utility bills, that was being completely eaten up by the fact that the cost of gas into those markets is high. And it's not because natural gas is high. Natural gas is, you know, so much cheaper than crude oil or fuel oil that's used for heating there. But it's just the fact that there's a bottleneck on infrastructure.
And then you add on to the fact that AI data demand need for power is going to increase a lot. You recently struck an agreement with an undisclosed investment-grade company to provide natural gas and power infrastructure. It's a 10-year purchase power agreement. The total cost of the project is about $1.6 billion. Can you tell us anything about who that customer is?
No, we cannot.
Okay.
So, and you know, the good news is we have a customer that really wants to make sure we get all the permitting done, that we work closely with the local authorities to get the permitting done there. So we very much respect that, as much as we'd like to, you know, talk about who that is.
Are you in other conversations with other companies to do something similar?
Yeah, yes.
How far along are those conversations?
I would say they're pretty advanced, and one thing we've learned is that speed to market is so critical right now. And what we learned in this last process was actually that these companies don't really want to have to go to the gas company to buy their supply and to the power generator to build the generation and then to manage that. They just want somebody to show up with the power and provide the gas supply to provide that power. And that's obviously something that Williams is really well positioned to do.
Well, talk about that, because I think of you guys as like a pipe thing that like moves liquids.
Yeah.
Like, what do you have to do with power?
Yeah. So you know, if you think about today, most of the natural gas now in the U.S. is produced, or sorry, most of the power generation in the U.S. today is coming off the backs of natural gas. We've been in and out of the generation business for years. But what people probably don't appreciate is those same gas-fired generators that are used to compress the gas and move the gas on our pipelines are exactly the same piece of equipment that's used to spin the generator to provide power. So we're one of the largest buyers for Solar turbines, which is a Caterpillar arm, And so we have a great relationship with Caterpillar through that. So we're able to get access to these, you know, very in-demand power generation facilities because of our relationship there.
So when you came to this deal and the conversations that you're also in, what's it like to come to pricing? How hard is it?
You know, the main issues, well, I would say, you know, we were very transparent about what our pricing expectations were. The main issue at the negotiating table was speed and reliability.
Okay, so they're willing to pay a premium or just pay
I wouldn't
up
say
for
it's
that?
a premium. I would say it was, you know, better than they could get off the grid. And certainly from a timing standpoint, a lot better than they could get off the grid. And so the grid in some of these areas is so, you know, one of the areas that we serve a lot is the PJM market.
The Northeast, yeah.
And it takes, you know, people are getting told it's going to be 8 years before they can get an interconnection, get somebody to study the interconnection for some of these large loads. So the market just has no appetite for tangling with that kind of bureaucracy, and that's why we're going to see more of this kind of behind the meter. You know, people use this term behind the meter like everybody would understand what that means. It simply means that these people are buying their own generation facilities and they're not being connected into the grid.
Well, funnily enough, my next question was about behind-the-meter projects. So what's your willingness to increase CapEx if those kind of projects go through, or those, you have a potential like 30 behind-the-meter projects that could come through? Like, what's your CapEx tolerance?
Yeah, I mean, we have a lot of capacity right now. The good news is that our gas pipeline business and our gathering business has been producing very high returns for us, so a lot of incremental cash flow. So we have a lot of capital, a lot of financial capacity right now to invest in this space. Obviously, it's going to have to be, you know, secured with strong credits for us to take that on. But we've got quite a bit of capacity right now. It'd 6 months ago, our investors were asking us, what are you guys going to do with all this cash flow? Like, cash flow is piling up on you. What are you going to do with it all? So this is actually kind of a nice place for us to be able to go, a nice investment for us to be able to go to.
So you do have a CapEx cycle going there. There's also potential M&A opportunities. There's been a lot of action in this space, particularly as it surrounds power. What would you be in the market for?
You know, we've been very successful at doing setting our strategy each year with our board, and so we kind of predetermine, hey, here's the stuff we want to go after. For instance, last year and the year before that, it was going after the storage business because we knew with both LNG loads and with intermittent power loads that the amount of storage, the demand for storage was going to go up. We've seen the demand for gas over the last 10 years go up by 47%. And storage only went up by 2%. So new storage capacity only went up by 2%. So we kind of sit back, study, and get real conviction at the board level on this is what we're going to go after. Until we see the signals change, we're going to go after that. So we went out and we're the largest owner of storage now in the Gulf Coast area.
So now what's the theme?
And so now we are in the process of continuing to do bolt-on transactions, particularly in areas where we think there's going to be a new call on gas. I mean, you talk about all this demand side, you know, investment. Well, there's going to have to be a lot of supply side investment in the gathering areas to be able to keep up with all this demand. And so that's the kind of the next area we're looking at is where is all this gas going to come from and how do we position ourselves to be able to take advantage of that.
Is volatility and uncertainty good for helping make those decisions?
No. No, you know, we have a gas trading arm that, you know, loves to see volatility, obviously, but no, in general, you know, we like to see gas prices at a level that producers are making a decent return and that it's low enough that it incents people making big capital investments like LNG export facilities, like power generation facilities.
What's that price? What's that perfect price?
It depends on, you know, where we are in the inflation cycle, but right now we think, you know, kind of the high threes is a pretty good number, and a lot of producers are saying, no, it's $4.50, it's $5. Well, you know, we're seeing pretty good response right now from the producing community at these kind of prices. So, but we definitely have got to get after it because there is a lot of incremental demand coming on between LNG and the power generation. And at least for the time period, it's going to be pretty sticky demand. It's going to be some pretty heavy loads on the system. And so, you know, in January of this year, this is an amazing stat to me. We get so much attention from our investors on, oh my gosh, you guys got a data center project. That is so cool.
Yeah.
Well, it's not that big a load, frankly. I mean, it's a nice load and it's a nice return and hopefully the first of many to come. But what we did announce at our earnings call this year was in January of this year, on Transco alone, we saw a 10% increase over the highest January we'd ever seen on our system, and it wasn't cold weather. This is on top of the January of 22 when we had a blizzard that hit the Northeast, and that really peaked the demand. So a 10% increase for the entire month in terms of volumes on our system, and this winter alone, we have seen 18 now of the top 20 peak days ever on our systems. All the weather cycles we've ever seen, 18 of the top 20 peak days. So the demands on our system are really picking up. If I was an investor, I'd be wanting to know more about that, frankly. So
I'm sure. And it's not, I mean, that's more business opportunity for you and not just data center demand. I really appreciate it, Alan. Thanks very much. Alan Armstrong, Williams CEO, joining us there. Paul, back to you.
All right, Alex Steele, thank you so much. We appreciate that. That's Bloomberg Intelligence co-host Alex Steele. Speaking with Williams Company CEO Alan Armstrong down at CERAWeek down in Houston, Texas. All right, right now let's go get a reset, and we can do that with Bloomberg Business Flash with Charlie Pellet.
Hi, thank you very much. And here's what's going on. A little change right now on the S&P 500 index after earlier losses. Still down, still in the red, down 0.2%. The Dow down 301 right now, down 0.7%. S&P, by the way, down 10 points now. We do have NASDAQ back in the green. Been a volatile day for the NASDAQ Composite Index, bouncing between gains and losses, but right now we got NASDAQ up 85. That is an advance of just about 0.5%. And by the way, NASDAQ in the year-to-date column down 9.1%. The NASDAQ 100 index also advancing today, up by 0.4% with the 10-year, 4.26%. The 2-year right now 3.91%. Spot gold up 1%, 29.18 the ounce. West Texas Intermediate crude oil up 1.3%, 66.91 a barrel. And Bitcoin now up by 2.4%, 81,131 on Bitcoin. The National Federation of Independent Business is reporting that small business optimism fizzled, dropping to a 4-month low in February. And with that story, here's Bloomberg's Vinny Del Giudice.
Uncertainty is near a record high on Main Street, USA. More small businesses signaled they will scale back investment as they assess President Trump's economic policies. Federal cutbacks, meantime, are weighing on small firms that do business with the government. Inflation is an issue, too, and more U.S. small businesses are boosting prices to make up for their higher costs. Vinny Del Giudice, Bloomberg Radio.
And this morning, President Trump saying he is increasing the steel and aluminum tariff on Canadian goods to 50% to retaliate against Ontario's move to place a levy on electricity imported from the United States. Briefly, American Airlines and Delta both issuing a warning about the U.S. economy, suggesting consumer spending has pulled back sharply as economic worries have ratcheted up. Right now, we have got Delta shares down 7.3% and American down by 4.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Isabel Lee sitting in for Alex Steele. I am Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio in New York City. We are also streaming live on YouTube, so you go to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. We got some earnings out there today, some technology results last night from Oracle and Adobe after the close here today. Let's break it all down. Anurag Rana, technology analyst for Bloomberg Intelligence, joins us here. Anurag, let's talk with Oracle. The numbers, I understand, just looking at some of the reporting, coming in a little bit light, stocks trading down a little bit. What'd you hear about Oracle, and what does it mean for the cloud?
Yeah, the little bit lightness in 4Q that you alluded to is primarily due to supply challenges, which is, the data center expansion everybody's undertaking. So the realization of revenues from that. I'm, to be honest, a bit surprised about the stock reaction because the company gave 2 or 3 really interesting nuggets for us to chew on. The first one was very large bookings in quarter, though. So their remaining performance obligations or the contracts booked, spiked up 63% to $130 billion. And along with that, for their FY26, which starts in June, and FY27, they talked about sales growth of 15% and 20% respectively. So those are very strong numbers. So we are a bit surprised about the reaction today.
How did Oracle and other companies really react to Chinese upstart DeepSeek? I mean, they released an open source AI and that torpedoed basically the whole AI outlook. Did they mention it in their earnings call and in any of their statements?
Yeah, so they were already talking about some of that impact, but these guys reported very strong bookings. But I think your question is probably the most important one right now, because I think one reason for the stock selling off, despite these bookings, could be, does this trade continue going forward in the next 2 years or so? And I think that's really why people may be skeptical that 20% growth they're talking about 2 years from now, how dependable that is, depending on, do the companies such as the cloud vendors keep on spending very aggressively on capital expenditures?
Margins, profit margins. What would you learn at Oracle? I know some folks are calling that out.
Yeah, so we think they're going to go down next year. They really did not address that issue because I think they're going to talk about it in 4Q. See, when you take up your capex from 7 billion to 14 to 16 to 20 over the next, just let's say 2 years, it's going to have an impact on profitability because the business that's coming in, it's less profitable than your core database business or your applications business. So we think margin's going to be dented by 100 to 200 basis points next year. Consensus doesn't have that figured it in their outlook at this point. We think those numbers do come down.
Let's now go to Adobe. March 18, they outlined their AI strategy. What are you expecting?
Yeah, we should see a lot more infusion of Gen AI across their entire product suite. Whether that's their Creative Cloud, Photoshop products, whether it's the PDF, or whether that's their digital experience business that has a bunch of software products that deal with advertising and marketing. There is a lot of emphasis right now on Adobe to showcase their Gen AI capabilities because this is probably the most widely argued stock on Wall Street right now. If you look at the valuation of Adobe, I've never seen it at this level, in the last 20 years or so. This is because people are worried about their core business being eaten up by free AI tools.
All right, Anurag, thanks so much for joining us. Appreciate it. Anurag Rana, technology analyst for Bloomberg Intelligence, joining us via Zoom from the Technology Hub of Chicago, Illinois. Looking at the Adobe stock here, it's up just up under 1% today. That's kind of flat on the year and down about 20% over the trailing 12 months. So as Anurag was suggesting, a little bit of uncertainty there, but they're going to have an investor day coming up, and maybe that'll shed some light on it here. The real news here, Isabel, has just been kind of the market once again being forced, if you will, to kind of discount a piece of economic policy coming out of the White House and perhaps interjecting another level of uncertainty.
It seems like it's whatever you want it to be. You cherry pick and you choose whether you're going to be spooked or you're going to be excited. I spoke with the JP Morgan Lebovitz yesterday, and he was like, they're ready to buy the dip when the S&P hits below 5,500. They're looking at financials and tech. But then for now, they say longer term, the economy is still humming along. We're not seeing cracks in the credit market. Yes, risk premium is high, but economy's still good.
All right. Citi, on the other hand, saying don't buy the dip yet. Coming up, we're going to check in with Mary Ross Gilbert, Bloomberg Intelligence Senior Equity Analyst. She covers the retail space, including Kohl's. Kohl's came out with some weak guidance, and you combine that with the weakness we saw from some of the airlines, calling into question the consumer's health right here. This is Bloomberg.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Isabel Lee, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. Alex Steele down in Houston for CERAWeek Energy Conference. She will be back tomorrow. We had some earnings here today from some retailers. I'm going to call out Kohl's, big department store. The numbers, they missed on EPS. They came in line with revenues, but their guidance was really weaker than expected. The stock is down 22.5% today. A real disappointment, down at a 52-week low, so really taking it on the chin. Let's get the latest. Mary Ross Gilbert, she's a senior equity analyst covering the retail space for Bloomberg Intelligence. She is based in our Los Angeles, California office. Mary, what did you hear from Kohl's here, particularly about their guidance coming in weaker than expected?
Yes, Paul. So with regard to Kohl's guidance, first of all, I think they're really hoping to beat the numbers, but they're expecting their comp sales to be down 5 to 7% in this coming year. And if you look at the performance in the fourth quarter, their revenues came in sort of in line, fairly close. Their comp sales were down about 6.7%. But when you look at what's going on, the Sephora business was up 13% on a comp basis. That means that the rest of their categories, and they're mostly apparel related, were down double digits. So it's very concerning because that Sephora business, since they brought it in, is now $1.8 billion in annual revenues. Meanwhile, they lost about $3 billion in revenues, and now we're looking for further declines this year. So that's what's really concerning. Now we have a new CEO. This is the third CEO in 4 years, Ashley Buchanan. And, you know, he gave a quick peek at what he sees are the opportunities. They need to really get their merchandise assortments right. They did bring back in private label, jewelry, and petites, because those were some of the things that they took out when they brought in some new brands. And they found that they were alienating their core customer. Another issue was on the promotional side. They always have these great little coupons, but what they did was they had raised the number of brands that were excluded from the promotions to an all-time high in 2024. Their objective is to reduce that to make it more compelling. So they have a number of strategies that they have to employ here, and it's going to take time. So that's why the outlook for this year looks dismal, along with the fact that the consumer climate, particularly for their low-income cohort, are challenged by still high inflation and just an uncertain environment with the ramifications of higher tariffs.
Among the many things that jumped out to me is why they're bringing back fine jewelry. How do you square that with a struggling consumer base? They're not the latest retailer to cast doubt on the strength of the U.S. consumer.
Yes, Isabel, so it's a good point, but it's important that you have that for a gifting option, and these items are not, it includes not just fine jewelry, but also costume jewelry. And that category, because they did bring it back in, their sales were flat in the jewelry category. So that was, or accessories category was flat. So that shows that that strategy of bringing it back, because it's very important for gifting. And once again, if you look at the promotions that they offer, I was just in a store yesterday. For jewelry, they have buy one item, get the second item like half off or something like that. So they do have some compelling value that they're bringing the consumer there. It's important for gifting. So for example, for Valentine's Day, and then also, you know, for the holidays.
What are they saying, Mary, about tariffs and their ability to pass along price increases or conversely take it in their margin?
Yeah, so tariffs, it wasn't a huge topic on their call today. And if you look at the past, they weren't really impacted. They were able to pass it on. And I think what they do is they work with their vendors and they source. So if you look at their private/exclusive labels, that business, they're able to, you know, they haven't disclosed exactly how much they source from China, but they're able to basically work with their vendors on you know, creating that price, the product at a price point that fits into their value equation. And so the last time around, if you looked at 2018, 2019, they really didn't call out a specific impact related to tariffs. They said that they were okay. They were able to offset it with either cost savings or just the way that they were able to price it in, in terms of building the margin.
How about store visits? Kohl's isn't the only one struggling with that. I myself have just shopped basically online. How are they attempting to attract customers back in store?
Yeah, so Isabel, actually their stores performed better. Now remember, they were, the sales were down, but they outperformed online. So, earlier in the year, we had seen where online did better than in store, but actually, the stores are doing better than online. So they're actually, and we're seeing that from a number of retailers where we do see really good performance in store. And if you look at off-price, I mean, that's really based and built on in-store visits.
Right.
And that's when you look at who their competition is, and where they're losing share, they're probably losing it to off-price.
All right, Mary, appreciate it so much. Mary Ross Gilbert, she's the senior equity analyst covering the retail space for Bloomberg Intelligence, based out there in Los Angeles, talking about Kohl's. The weakening sales outlook kind of disappointed everyone, so that stock is trading down. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Isabel Lee, thank you so much for sitting in the past couple of days for Alex. That was fun.
What a wild ride in markets.
Exactly.
It was very fun.
What a wild ride in the markets. We're probably going to get some more to come here, so we'll keep on top of that. Balance of Power with Joe Matthew is next after this global news update. S&P 500 off 34. This is Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. New moves by President Trump as he doubles down in his trade battle with Canada.
President Trump slapped back against Canada's latest tariff on electricity exports to the U.S. by increasing this nation's tariffs to 50% on all steel and aluminum coming into the U.S. from Canada. Trump says Canada must stop what he calls its anti-American farmer tariff and is threatening an increase on tariffs on cars unless Canada drops other tariffs. He says the only thing that makes sense is for Canada to become the 51st state. Allison Keyes, CBS News, Washington.
The sell-off on Wall Street today isn't as steep as yesterday's, but the Dow is down 435 points. PNC economist Gus Fauché.
I don't expect these tariffs to last particularly long. You can see the negative market reaction. President Trump is concerned about what the stock market is doing. He takes that as a reflection on his presidency.
On Capitol Hill, House Speaker Johnson sets a vote for later today on a continuing resolution.
We'll have the votes. We're going to pass the CR. We can do it on our own. But what I'm saying is Democrats ought to do the responsible thing, follow their own advice in every previous scenario, and keep the government open.
Some Republicans have voiced opposition. Secretary of State Rubio and other U.S. officials meet with Ukrainian representatives in Saudi Arabia. CBS's Jennifer Jacobs is covering.
My sources are telling me that they're getting into technical details. They are making progress. I'm hearing a lot of positive signs, and there is a lot at stake here. They have a long list of items that they're hashing through, everything from intelligence sharing to details of a partial ceasefire. All of that is being discussed.
4 people have now been charged in the death of a 5-year-old boy who was killed inside a pressurized oxygen chamber at a medical facility in suburban Detroit back in January. Southwest Airlines rolling out fees for checked bags for the first time in its 54-year history. Industry analyst Henry Hartevelt says it's a bad move.
I think that Southwest is feeling pressure from its board and one of its largest shareholders to make money and make money fast.
5 years ago today, the World Health Organization branded the coronavirus outbreak a global pandemic. Dr. Ashish Jha was the COVID czar in the Biden administration.
A large part of the job I focused on when I was at the White House was making sure we are better prepared. And I would argue we are absolutely better prepared today than we were 5 years ago. But, I always think about the military's kind of mindset on preparation. It's not a one and done. They're constantly preparing. That's the way we should be treating this.
Wall Street, the Dow is down 423. This is CBS News. A woman in New Jersey has returned a library book that was 99 years overdue.
Mary Cooper was going through boxes of her late mother's belongings when she found the book, which someone had borrowed from the Ocean County Library in 1926.
And I find the dates, and I'm thinking this had to have been taken out by my grandfather.
That library doesn't charge late fees anymore, but it says if it did, the fee for that book would be $18,000. The library is putting the book, titled Homemade Toys for Girls and Boys, in a glass case. Michael Wallace, CBS News.
Utah's governor has now made it clear he will sign a bill to ban fluoride in drinking water that passed the state legislature a few weeks ago. Utah will be the first state with such a ban, despite widespread opposition from dentists and health organizations. Researchers have found water fluoridation prevents about 25% of tooth decay. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
President Trump announces bigger tariffs on Canada despite the losses on Wall Street. Welcome to the fastest show in politics as stocks continue to sell off today after Donald Trump announced plans to hike steel and aluminum tariffs to 50% in retaliation for the retaliation. We'll be joined by Bloomberg senior editor Mike Regan straight ahead. He's at World Headquarters as the president prepares to address the business roundtable today in Washington. We're going to take a deep dive on this market and find out exactly what Wall Street thinks of Washington today. The House is set to vote on a stopgap later on to avoid a shutdown. We're 3 days out from that happening. Potentially, we'll talk with Nathan Dean at Bloomberg Intelligence, who's running the odds, and we'll have analysis from our signature panel. Bloomberg Politics contributors Rick Davis, Gidi Shanzado along for the ride. And it's all after a look at Wall Street. Let's get into this market right now with the voice of Wall Street. Charlie Pellet has his hands on the markets as we speak. Charlie, what are we doing?
Thank you very much, Joe Matthew. Indeed, the Dow, the S&P, NASDAQ, all declining. We'll call it Trump Tariff Tuesday with the S&P 500 index now down 36. We're off session lows, but right now down 0.6%. We've got the Dow Jones Industrial Average down 454 points on the Dow, a decline now of 1.1%, while NASDAQ is down 37. The NASDAQ Composite Index down 0.2%. The NASDAQ 100 Index, full of big tech names, down by about 0.3%. The 10-year at 4.24%, with a 2-year currently yielding 3.89%. Gold is up $28 the ounce, up 1%, $29.16. West Texas Intermediate crude oil up 1.2%, $66.82 a barrel. And Bitcoin now surging 2.4%, 81,123 on Bitcoin. John Stoltzfus is chief investment strategist at Oppenheimer. And this morning on Bloomberg The Open, he was asked if the Trump administration can still be considered business-friendly.
Well, I think so far it would seem to be less so than was anticipated, okay? But one has to realize that there's a lot of pushback likely to come from business as well as from the consumers.
John Stoltzfus of Oppenheimer. Indeed, equities pushing lower at this hour as President Trump says he is increasing the steel and aluminum tariff on Canadian goods to 50% to retaliate against Ontario's move to place a levy on electricity sent to the United States. Again, recapping, stocks lower with the S&P 500 index now down by just about 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, a very busy man right now, watching the markets for us, and we'll get back to Charlie a little bit later on this hour to see how things stand. Thank you for joining us here on the Tuesday edition. Yeah, it's only Tuesday. As we join you live here on Bloomberg Radio, on the satellite, channel 121, and on YouTube, where you can find us right now by searching Bloomberg Business News Live. Welcome to the second half. You already made it. Yeah, this is day 51 of Donald Trump's term, the back half of the first 100 days, if you will. And it's not getting any better on Wall Street. Add the fact the government runs out of money in 3 days unless they clear this CR this week, and we've got great uncertainty once again. It's not playing well in the markets. You just heard about it from Charlie. The one thing going up, other than a bit of a bid under Bitcoin here, is the VIX now back above 28. And I'm starting to hear the word capitulation, right? That's what everybody wants to know. When are we going to bottom out on this thing? And when is Wall Street finally going to get to the point where it cannot resist to start buying? We've actually got a major analyst out today saying, get ready to buy the dip, time to write the shopping list. But every time you turn around, there's another headline from the White House that changes the game. And that's why we wanted to spend some time today with Mike Regan. He was kind of joined us yesterday, and we learned so much from Mike that we wanted to start the show today with Bloomberg senior editor and our hands around the markets. He's with us from New York. Mike, it's great to have you back.
Oh, thanks for having me, Joe.
I'll ask the question that everybody's asking. How would you describe this market? Are we in the process of basing here? Because the technicals would suggest that this thing is broken and we could have more to lose.
Yeah, Joe, in the morning I would have thought maybe we'd at least get a short-term reprieve today. It did look like the market was stabilizing a little bit, that might even recover some of yesterday's big drop. But those headlines coming out with President Trump's announcement of the steel and aluminum tariffs on Canada that he's now saying will be as high as 50%. And the same post, he basically promising that he wants to put the Canadian car market out of business, really kind of took the wind out of any rebound we were seeing earlier. The one thing I would point out, too, is that at this point, we've kind of moved beyond just the headlines and the social media posts from Trump about the tariffs. We're really starting to see some evidence from corporations themselves that they are really bracing for disappointing profits going forward. We saw the big U.S. retailer Kohl's with a very disappointing earnings outlook today. Dick's Sporting Goods, another one. And then there were the two airlines, Delta Air and American Airlines, also with very disappointing profit outlooks. Now, part of that, of course, can be attributed to concerns about safety after that plane crash, the collision with the military helicopter earlier this year near Washington. But it's all sort of adding to the mix of what's appearing to look like a lot of concern among the consumer-facing companies about a potential slowdown, not only in demand, but also just this uncertainty over what the tariff landscape is going to look like. How do they sort of adjust their supply lines to compensate for the tariffs that are coming, that have been put in place already and that are coming in the pipeline? Obviously, it's a very much a evolving situation with President Trump. One day, we're bracing for tariffs. The next day, he's postponing them. So that's really hard, Joe, for corporations to plan around.
Yeah, absolutely. And it's putting a great sense of urgency under this event. The president's going to be talking to the Business Roundtable after, and I'll ask you about that. But to Mike's point, this is maybe the longest post we've ever seen on Truth Social, by the way. I guess there's no character limit on this thing because it would take me the hour to read the whole thing. But he's based on Ontario, Canada. He says placing a 25% tariff on electricity, for some reason, in quotes, coming into the United States. I have instructed my Secretary of Commerce to add an additional 25% tariff to 50% on all steel and aluminum coming into the United States from Canada. He says one of the highest tariffing nations anywhere in the world. So, question about whether he means this, of course, Mike, because to your point, we've seen them come up, he pulls them back, but Wall Street isn't waiting around to find out, right? We're pricing in the worst case scenario here.
Yeah, Joe, and I think there's a really big shift in the way Wall Street is thinking about Trump and the tariffs. It used to be in his first term especially, and we talked a little bit about this yesterday, that a real negative reaction in the stock market especially would perhaps cause many to believe that Trump would soften his tone and maybe backtrack a little bit on his plans. But I think, the fact that he came out with this post about the Canadian steel and aluminum tariffs on today, even after we've seen this really sharp decline in equities, is really reinforcing this idea on Wall Street that for the time being, for the near term, the White House does not really seem to be concerned at all about a negative stock market reaction or even a negative economic reaction. Some of the comments from President Trump over the weekend, speaking in an interview with Fox, where he said, there's going to be a period of readjustment, I believe were his words, and
he sure did.
Didn't necessarily rule out the chance of a recession. This is kind of a new paradigm that I think Wall Street is dealing with right now, trying to wrap their heads around exactly how much pain Trump will tolerate.
And you thought you knew Donald Trump. Well, look, by the way, you see Amazon's putting The Apprentice back on if you want to catch up on the good old days. Mike, what does Donald Trump need to say tonight? And what questions might he be asked by members of the Business Roundtable? This is kind of a high-stakes moment. The timing here works out in a peculiar way for the president, and we're on the eve of the CPI coming out. What's your thought ahead of this conference later?
Yeah, I think, obviously the Business Roundtable is going to want some clarity on exactly what his goal is with these tariffs.
They're not going to get it, though, are they?
We'll see. I mean, I think, to what I was saying earlier, right now, it doesn't feel like this massive dip in the stock market, this drop in consumer confidence that we've seen in some of the recent reports, even an increase in inflation expectations. None of it really seems to be inspiring Donald Trump to soften his tone. So personally, and you would know better than me, I'd be surprised if he comes out today with anything softer in tone and messaging than what he's already said, which is very aggressive. Today, surprising everyone with the higher tariffs on Canada. So he seems like he is very much in a fighting mode. The U.S. against many of its traditional allies and trading partners, and I would be very surprising if he softened that up at all today. So I don't think the market, while they'd be happy to see sort of a reconsideration from him and a little bit more clarity on the tariffs and how long they'll last and all that, all the evidence we have suggests that that's probably not coming in this speech.
We're spending time with Mike Regan, Bloomberg senior editor, in what is the true confluence of Washington and Wall Street. Here you have it, guys. This is a moment, frankly, as painful as it is, that was made for Bloomberg. And Mike, just like that, here comes J.P. Morgan Asset Management, David Leibovitz, start right in the shopping list. By the way, following along with Michael Wilson, right, at Goldman Sachs, he picks 5,500 on the S&P. When we go through 5,500, you start buying. At what point can the market not resist?
Well, it's a good question. I mean, I would say that it's not a consensus on Wall Street that it's time to buy the dip. We saw earlier today Citigroup strategists basically downgrading U.S. equities to neutral from the equivalent of a buy. We've seen strategists at HBC Holdings saying the same. So, it's really hard to say exactly how far this goes. I would, if you like to go to sort of Finance 101 and look at the valuations, equity prices came into this year at very high valuations. PEs well north of 20 in the mid 20s. They're now back down on a forward basis. That P is back down to around 20. Which is lower than it was, but still not a screaming buy for a lot of investors, especially with elevated inflation. So, I think you have to be very careful about when is the perfect time to buy this dip.
Mike, I might need to call you again tomorrow. I mean, we've got this thing at the Business Roundtable tonight. We've got CPI tomorrow morning. This could be another really intense trading session, even if we get through today. So stay by the phone. Stay close to us. Mike Regan, great to have you, as always, here at an important moment. Bloomberg senior editor with our eyes on the markets. Charlie Pellet will update the indexes and take a look at a few stock stories coming up, and then we'll bring in Nathan Dean because we have to get to this possible government shutdown. Can they pass a bill today? We're going to find out together. Nathan Dean from Bloomberg Intelligence on the way in next, right here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are being rattled anew as President Trump ramps up the trade war with Canada. The Dow, the S&P, NASDAQ, all in the red. NASDAQ, it's been a volatile day, swinging between gains and losses, but right now NASDAQ remains lower by 0.4%. The NASDAQ Composite Index down 74 now. The NASDAQ 100 Index down by 0.4%. S&P down 47 to keep it all in context, down by about 0.5%. Dow Industrials lower now by 1.3%. The Dow down another 530 points. The 10-year at 4.24%, with the 2-year 3.89%. Spot gold up $29 the ounce, up 1% now to $29.17. West Texas Intermediate crude oil up 0.9%, 66.61 on WTI, and Bitcoin now up by 2.6%, 81,313 on Bitcoin. Southwest Airlines, end of an era there. It will begin charging passengers for some checked bags, ending a free bag policy that has been a hallmark of the carrier since its founding more than 5 decades ago. Investors like the news, with Southwest Airlines on a down day for the rest of the market. Southwest flying higher now by 9.3%. Recapping, stocks lower. S&P down right now by 42 points, down by about 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie. Thank you, sir. Doing it with a smile, you know. Markets are in pain. You always have Charlie Pellet to make you feel a little bit better, at least for a minute. Then you look at the markets again. This has not been fun. There's a bit of a bid under Bitcoin, but there's a lot of red here on the screen. We'll see how that fares after the business roundtable gathering later on. The president is supposed to speak, and I'll be clear, after the bell to the group here in Washington. Then we wake up to CPI tomorrow, and the confluence of those two events could be an interesting driver for better or worse. You can keep that in your pocket as we watch Capitol Hill today. Pretty important. They say they're going to vote, and, well, as you're going to hear in a second from the speaker, they say it's going to pass, but that remains a real question. With several holdouts still in the Republican conference, that's all you need to sink this, because not a single Democrat, as it appears, is preparing to vote for it, at least in the House. It'll be a different story in the Senate. And Speaker Johnson held a news conference about this a short time ago. Here's what he said.
You can all read the bills, 99 pages. This clean CR contains no poison pill riders, no policy riders there at all, no cuts to Medicare, Medicaid, or Social Security, zero, no cuts to veterans benefits, zero. In fact, as was noted, we plus up the accounts for veterans.
4 o'clock, we're told. No one seems to know exactly what the vote count will be. 99 pages. You have a couple of hours to read them all. Nathan Dean already has. That's what he does for a living, and intercepting calls from people like you who want to know what in the world is going on. The chances of a shutdown on Friday, that's what we're talking about here. The government runs out of money unless they figure this out and pass it through the House and the Senate. And there could be, by the way, it's funny how Washington works, there could be a stopgap to allow enough time to pass a stopgap. Either way, the markets wouldn't love a government shutdown on top of everything else that's going on. That's why Nathan's phone is ringing as our senior U.S. policy analyst at Bloomberg Intelligence. Nathan Dean, great to see you. Your friends calling? You must need a headset to keep up with the phone calls.
We're actually getting a lot of calls from the fixed income side at the moment because the government shutdown bleeds into the debt ceiling issue. Because when it comes to the government shutdown, there's not a lot of equity impacts here. I mean, markets generally, if they do respond, they're usually back up the next day. It's what happened with President Trump in the first administration when we had that 35-day shutdown. Yeah. But the question is that if Congress can't come together on a 6-month continuing resolution, which we're coining clean-ish, not clean, but clean-ish, what happens for the debt ceiling debate that comes in June or July? So that is the bigger concern, I think, for the markets. This is almost like a test of going through the process before we get to the debt ceiling debate. But when it comes to the shutdown, we still think we're only at a 30% chance of it shutting down, maybe with some additional time, per your point about getting the Senate to come together, because we just don't think this time is ripe for both Republicans and Democrats to say, this is the point where we're politically advantageous in moving forward with a shutdown.
You've got names on the board: Tony Gonzalez, Tim Burchett, Corey Mills, Rich McCormick, Kat Kamak, Andy Ogles, Brian Fitzpatrick. Does Donald Trump need to start making phone calls, or is the assumption that everyone falls in line eventually around here?
I think it's a combination of both. I mean, obviously, I think Representative Thomas Massey may be a little bit different.
I guess so, huh?
You know, President Trump put out a Truth Social post about him, which
Did you like that?
Representative Massey's already fundraising on.
Yeah, I bet.
But what I will say is that the combination of pressure coming from the White House, plus the idea here that they need to show unity, I think it's possible that this could pass. I also think it's possible it may not. It's going to be that close. However, when it comes to the House, if they pass this, it goes to the Senate. You'll need probably 8 Senate Democrats to go with it. I think Senator Rand Paul will be a no. But if I just don't think this is the time that the Senate Democrats are going to say, look, we're not entirely on board with this deal, but it's not a bad deal either. And so the Republicans could have insisted on a lot more here. Do they want to risk that in 1 month from now, that the Republicans come back and say, you know what, let's go for a lot more cuts. Let's go for a lot more different things. So, I think Senator Mark Kelly was hinting at this yesterday when he was talking to some reporters about this. So I just, again, don't think we're going to see a shutdown this weekend.
Interesting. Boy, you're naming names here. Imagine what it's like to be Tom Massey. You look at Truth Social, this President Trump. Congressman Thomas Massey of beautiful Kentucky is an automatic no vote on just about everything, he says. In all caps, he should be primaried, and I will lead the charge against him. He's just another grandstander who's too much trouble and not worth the fight. Reminds me of Liz Cheney, by the way. Those are fighting words. So we heard back from Mr. Massey. 3 times I've had a challenger who tried to be more MAGA than me. None busted 25%. So we're going to maybe figure he stays a no vote on this, right?
Yeah.
Is there a chance that the speaker brings it to the floor and it fails?
I think there is a chance. I think there is a chance that the speaker brings it to the floor and it fails. But if the speaker brings it to the floor, I wouldn't say that the pressure is on him. The pressure is on the remaining no votes because are you going to bring this idea that a Republican bill that is supported by the White House fails on national TV, and then you have this type of drama
so
going
that's a
through?
Strategy in itself.
I think that's a strategy in itself, because I do think that the amount of pressure that's coming from the White House is unlike anything that anybody on Capitol Hill has seen over the last 20, 30 years. And so, again, I just wouldn't be surprised if this does pass, and then the onus goes on to the Senate Democrats.
Fascinating.
I didn't think that this past week, but the level of pressure coming from the White House is a little bit stronger than I think people were talking about.
J.D. Vance went up there this morning. Could he take credit for it, this thing?
Maybe.
It's over the finish line. All right, so I have to ask you about tariffs, because I know your phone's ringing about that as well. That's where the real uncertainty lies. I mean, you put, 30% odds you said on a shutdown?
Yeah.
So let's put that aside for a moment. Interesting conversation last evening with Doug Ford, the premier. You know, they say premier, not premier in Canada. I learned that yesterday. You knew this already. Chicago guy, I don't know. He's the guy slapping retaliatory tariffs on the United States and got Donald Trump very upset last night. We talked to him on Balance of Power. Here's what he said.
There's one person that will put us in a recession, and that's President Trump. I always say when the market speaks, you have to listen. The market is speaking. CEOs are speaking. People are speaking out. Why is he doing this to his largest customer in the world, Canada? No one buys more products off the U.S. than Canada does, including autos. I don't believe in protectionism with your two closest friends and allies in the entire world.
I could listen to that accent all day long. Fast forward to this morning. Based on Ontario, Canada placing a 25% tariff on electricity into the U.S., I've instructed my Secretary of Commerce to add an additional 25% tariff, which, of course, Nathan Dean brings us to 50%. Is this still a negotiating tool? What are we calling this now at this point?
What we're calling it is shock and awe. I mean, we actually use the coin shock and awe because President Trump has consistently tried to shock the markets and negotiating partners.
Shocking into a heart attack.
Exactly. But then subsequently over the next day or two, then you see the little nugget come in, Canada and Mexico, 25% tariffs, 30-day delay. Canada and Mexico tariffs are on. Now it's April 2nd. Now, I will say this situation is a little bit different because unlike a universal tariff, we're talking about steel and aluminum. And, obviously Premier Ford is a little bit different in terms of Mark Carney, the Prime Minister delegate or, designee that's coming in. So there's a little bit of different negotiations here at play. But I will say is that, President Trump continues to go down this path of tariffs, and April 2nd is coming faster than we think. And this idea of reciprocal tariffs, investors need to prepare for it, because I certainly think President Trump will put these tariffs on April 2nd.
Yeah.
The question is, how much do we see them roll back in the days after? Are we looking at exemptions? Are we looking at different types of, scaling down numbers? Not sure, but it will be really interesting to see tomorrow and the rest of the week. Is there any type of nuggets that we can see where potentially some of this is pulled back?
Is this drawing fixed income questions as well? You mentioned concern about the debt ceiling, but this plays into the bond market directly as well.
Yeah, it does. It all does. I mean, and so I think more questions we're getting right now on tariffs is about automobiles. President Trump said, look, he's threatening to destroy the Canadian automobile industry. But what he's talking about is the supply chain of American automobile makers that use Canada and Mexico as well.
Yes.
You can't change those supply chains overnight. Bloomberg News just put out a great story about aluminum bats for baseball. I mean, there's a lot of small things that are coming out of Canada that Americans use. And the shifting of manufacturing, the shifting of supply chains can't happen overnight. So, we have to actually essentially play the scenario of, look, what does the world look like under 25% universal tariff? Are there going to be export taxes? Because, look, we haven't talked about Canadian retaliation either to this. If they wanted to make potash a very difficult thing for American farmers to obtain, they can.
Absolutely.
And so, it's, again, just playing the scenario analysis of picking a specific industry, in this case, automobiles and fertilizer and ag, and then trying to dive a little bit deeper into like the supply chain challenges with the idea that maybe this gets resolved in 3 to 6 months. I mean, I don't want to say it can't happen forever, but, there probably is an equilibrium coming sometime in the next 3 to 6, 9 months.
Okay.
Whether it's positive or negative for the industry, we still have to wait and see.
Equilibrium is quite a word to use right now. That story you mentioned, by the way, Sean Donnan did a great job. From baseball bats to caskets is the headline. Trump tariffs set to hit home. It's interesting to actually put products to the story here. You talk about, aluminum and steel as these sort of abstract things. New tariffs will target over $150 billion, Sean writes, in imported consumer products, aluminum baseball bats, fishing reels, burial caskets, in addition to the raw products. So funerals are going to get more expensive?
Well, I think American consumers are going to be paying attention to it. And that's where President Trump needs to, I think out of everything here that potentially could change President Trump's mind, it's the sticker shock that Americans are going to see. Look, my colleague Anurag Rana put out a note about how the China tariffs are going to impact Apple. Yeah. I was on the fence buying a MacBook. I bought it that night.
Wow.
And so, because if it was going up 20%, even more, it was going to hit Apple's bottom line. Yeah. And so, I think that's the one thing that will change President Trump's mind, if it does, is this idea of sticker shock. Because President Trump has already said, look, buying American is not buying cheap goods, and there's more talking points coming out. But at the end of the day, prices are what drove a lot of people to President Trump in the November elections, and they're looking for price relief. So we'll have to see if the White House responds.
Just wait for that CPI tomorrow. We're out of time. How often are you getting the question, have we bottomed? Capitulation. Are we not there yet? We're not there
No
one's even asking you that.
Not yet.
That should say a lot. Nathan Dean, our good friend here on Balance of Power. Thank you so much, Nathan. Bloomberg Intelligence. Look for him on the terminal and online. Always a great conversation. We always learn a lot. 30%. Remember what Nathan said. We're looking at a vote in the House around 4 o'clock. We'll have our signature panel up next, right here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all trading lower. President Trump says he is increasing the steel and aluminum tariff on Canadian goods to 50% to retaliate against Ontario's announcement that it is placing a levy on electricity imported from the United States. Right now, the S&P is down 50 to 55.63 on the S&P. That is a drop now of 0.9%. We are close to session lows. The Dow right now down 568, a drop of 1.4%. While NASDAQ is down 75, a decline there of 0.4%. 10-year at 4.24%, with the 2-year currently yielding 3.90%. Gold up $28 the ounce, up 1%, 29.16. West Texas Intermediate crude up 0.7%, 66.51 a barrel. Bitcoin up 2.8% now at 81,485. Former Treasury Secretary Larry Summers says there's almost a 50-50 likelihood of the U.S. tipping into a recession this year due to a range of policy steps from the Trump administration that are undermining confidence.
You take the fact that markets were starting at a very high level in terms of valuation, and I think you have to say that there's in the range of, I'd say still slightly below, a 50% chance of a recession starting this year.
Bloomberg contributor Larry Summers speaking with Wall Street Week host David Weston. Oracle shares trading lower after last night's earnings report. Right now we got Oracle down by 3.5%. It did report disappointing quarterly results. It gave a sales and profit forecast for the current quarter that fell short of expectations. Again, recapping, S&P down 52 now, decline there of 0.9%. Balance of power continues, and back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Craving Steak and Shake today. I blame producer James, who pointed me to this hard-hitting interview that RFK Jr. did with Sean Hannity. Yes, at Steak and Shake, he traveled there and praised them for RFKing their French fries, calling on other companies to do the same. They officially started cooking with all-natural beef fat. I just learned at all of their locations. So producer James going to find out what the closest Steak and Shake is to our nation's capital. You already got it? Star City, West Virginia. I say we can make it by dinner, James. Maybe Elon Musk could have used a shake or something in the interview with Larry Kudlow yesterday. Did you see this? It was on Fox, of course. It got kind of downbeat. He seems exhausted. And wouldn't anyone be running multiple Fortune 500 companies? And of course, now the Doge. They got into how he's managing all of this, knowing that Tesla stock was down over 50% from its high just weeks ago. And we've talked all about the brand deterioration, people getting rid of their Teslas because of the political implications. Not Donald Trump. He's buying one, as he posted on Truth Social after midnight. Elon Musk, though, talking about the push and pull when it comes to balancing all of these responsibilities. Here's what he said.
Your stock is way down. You've been criticized left and right. Why are you doing this?
It is tough sledding. But I think we're doing the right thing here.
How are you running your other businesses?
With great difficulty.
But there's no turning back, you're saying?
I'm just here trying to make government more efficient, eliminate waste and fraud, and so far we're making good progress.
With great difficulty, was his answer. Raising a whole round of questions all over again. How long can he do this? How long will he be committed to it? That's where we start our conversation with our signature panel. Jeannie Shanzano is with us, of course, our Democratic analyst and senior democracy fellow with the Center for the Study of the Presidency and Congress, and our Republican strategist, Rick Davis, partner at Stone Court Capital. Jeannie, it was a really interesting conversation to put an ear on, and it makes you wonder if he's actually in this to close the deal on these budget cuts, or if, in fact, he's going to have to get back to Tesla, get back to SpaceX, and run those companies.
Yeah, he absolutely should. Of course, we should remember that was all said before Donald Trump said he was going to buy a Tesla. So maybe Elon feels a little better now. His midnight message to Elon. The reality is so much that of what he said about Social Security entitlements, Medicare, Medicaid in that clip was just straight out wrong. I mean, in the past, he's described it as a Ponzi scheme. It's not a Ponzi scheme. It's something we all pay into and expect that when we get older, it will still be there. Doesn't need reform? Absolutely. But the idea that there is what, $600 or $700 billion worth of fraud and abuse in the Social Security fund is absolutely outrageous. And so we have no evidence of that. He is right that we do need to do something about Social Security, Medicare, and Medicaid if we are going to balance the budget. But of course, his own president has said he won't touch it. And so you're left wondering, is he just going out on a limb because he's the richest man in the world and he can? Or is he doing a trial balloon for Donald Trump, who intends to actually touch these things? It's unclear, but he is making a really good campaign commercial for Democrats into the midterm.
What do you think of the way this is playing here, Rick? Donald Trump, as we've referred to on Truth Social, this is just after midnight. In any event, he writes, I'm going to buy a brand new Tesla tomorrow morning as a show of confidence and support for Elon Musk, a truly great American. Why should he be punished for putting his tremendous skills to work in order to help make America great again? I could ask you a lot of questions about this, Rick. Of course, nobody knows how long Elon Musk is going to be at the Doge or coming to work every day here in Washington, D.C. But what do you make of a sitting president of the United States investing in a product like this to make a political point?
Well, I'm not going to get too excited until I see him actually open the door and get in that Tesla, because he makes these kinds of promises all the time, and you rarely see that check written. And you can't blame Elon Musk for being a little down. By some calculations, he's lost $120 billion of personal net worth just in the last couple of weeks. So I get it. I mean, that's a punch in the face for anybody. And so I think that we're probably not seeing the last of his sort of sadness as this administration sort of careens into other areas. And I share the concerns that Jeannie just espoused about his comments around Social Security. Look, if there's that much fraud going on, where are we going to see the perpetrators put to justice? I mean, if someone's stealing hundreds of billions of dollars from the Social Security Administration, don't you think we should prosecute that individual? If he finds that there must be a trail leading to the people who are perpetrating it. So look, put up or shut up. If this is another bull in the china shop exercise where he goes in and breaks it and then figures out how to put it back together after the fact, I don't think the politics will sustain it if it's Medicare, Medicaid, or Social Security. These are safety net programs that the public depends upon in many cases for their livelihood.
We should remind our viewers and listeners, Jeannie, that Donald Trump already has a Tesla. He got a Cybertruck. Remember when the crypto bro gifted it to him during the campaign at Mar-a-Lago? It was wrapped in the pictures of Butler and Make America Great Again. I'm not sure we've seen him driving that around. So I guess this would be the second Tesla in the garage. Unclear what model he'd be looking for. But let's get into this because you both brought it up. This is important as I joke around with the Tesla stuff. Elon Musk saying entitlements are the big one to cut. Of course, straight out of the Doge, and said this to Larry Kudlow in that same interview. The waste report and entitlement spending, which is most of the federal spending, is entitlements. He said that's like the big one to eliminate. The sort of $500 billion, maybe $600-700 billion a year. Does Donald Trump need to pull him aside here, Jeannie? Remind him of the lockbox? That was a campaign promise, too, to not touch the entitlements, right?
It absolutely was. And, this is such a third rail of American politics that even the authors of Project 2025, most of whom support real reform to Social Security, put it at the end of Chapter 22, Joe, in the other things that we need to do section. So if it's too hot for Project 2025 authors to handle, it is too hot to handle. And that's why you have to imagine You know, part of the oddity here is yesterday, while the stock market was tanking in a very odd situation, Donald Trump, for the first day of the 7 weeks of his administration, didn't come out to talk to reporters. Elon Musk went out and said this very inflammatory thing about entitlements. And then the only thing we heard from the president was after midnight, he wants to buy a Tesla to support Elon Musk. All of which makes you wonder, is this a trial balloon? Are they actually thinking of touching these entitlement programs? And that is, of course, an enormous concern. And let's not forget, putting all this aside, DOGE has already started cutting the Social Security Administration, which administers Social Security. They've already started making changes there, which impacts their ability to fund Social Security. So we're left all once again with this sort of whiplash. Will they or won't they? And it makes many people, not just the market this time, but people on the ground who depend on Social Security and those of us who are paying into it for the future, very, very uneasy about what's going on here.
Well, you had the uncertainty over the tariffs, and if you didn't see that development this morning, the president is announcing his plan to double the tariffs on steel and aluminum from Canada because of their retaliatory tariffs. So now we're in the cycle here of the spin cycle of the tariffs. Now 50% is what he says. Rick, the stock market turned lower immediately. We're back in sell-off mode, and Donald Trump's going to stand before the Business Roundtable later on today. That, I suspect, could be a very interesting conversation because obviously the market is not buying into this. What could he say to make it better?
Yeah, look, I mean, I was just reminded when we were seeing him scheduled to do the roundtable of the first roundtable he did, where it was sort of this private meeting of business executives, where I think he was under the mistaken impression that it was kind of a subset of his campaign and got some pushback on these kinds of discussions related to the tariffs. So it'll be interesting to see whether or not he hits that audience today with the same kind of negative reaction. I seem to recall it was one of the low points of his campaign when he basically got shouted out of the roundtable. Now, we've seen a sea change, and he's president of the United States. But, you know, at what point in time does corporate America start connecting cause and effect and realize that even if it's just the conversation Trump is having with the world around tariffs, you know, threatening them and then putting them on and then withdrawing them, you know, in some cases it's affecting the markets from what we can tell, but it's not actually generating the kind of revenues that Donald Trump claims will make America rich again. So I think that's a conversation that, you know, the business community needs to start having with the White House.
Jeannie, obviously Wall Street isn't having it, and we're taking another leg lower today, but that is not moving Donald Trump. It does feel different than it did in the first term. A lot of people thought, you know, a couple of days of selling, he's going to pull back on all these tariffs, and that's not happening. But that conversation with the Business Roundtable could be an important one for him. Forget what Donald Trump says to the executives. What could they say to him that might move his view on this?
I don't know if there's anything they could say to move his view except to ask him to please give them some certainty as to what's coming and explain to him why they need that certainty. And it's not just members of the Business Roundtable, it's consumers as well. It is very difficult for any of us to plan. And I was just listening to your conversation, you know, those of us, and I know we were just talking about this, if you want to buy a computer or a laptop, you might need to do it now or forever hold your peace because you don't know if that's going to go up 20% at this point. So, you know, the reality is they could try to implore him about the need, both from the business and the consumer perspective, for some certainty, some long-term planning, for some end goal here. Is this really about fentanyl? Is it really about bringing manufacturing back? What is the long-term goal? And they can try to remind him that even though the Premier of Ontario says something, for him to go off on Truth Social in response to that's very much in keeping with Donald Trump, but it is very, very bad for our economy, for consumers, for businesses. So they can try to remind him of all of that. But what has he said recently? He has talked about the fact that we need to go through some and be willing to accept some pain, and his actions have been just utterly chaotic. And I hope that he changes that, but I have no expectation that later this afternoon he will offer that to the market.
He writes in the lengthy Truth Social post, "The only thing that makes sense for Canada be to become our cherished 51st state." Don't think that's going to happen today. We'll keep tabs on the markets, and our panel will be back with us in our second hour on the fastest show in politics. Stay with us right here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Wall Street resumes the sell-off as President Trump announces even bigger tariffs on Canada. Welcome to the fastest show in politics, with the president now set to address the business roundtable after the closing bell. As we witness the intersection of Washington and Wall Street together, I'm Joe Matthew alongside Kaylee Lyons in Washington. Welcome to the Tuesday edition of Balance of Power. Kaylee, the president reacting today to retaliatory tariffs from Canada, so the cycle has begun.
Yeah, the province of Ontario putting a 25% surcharge on electricity exports to 3 U.S. states, and President Trump, I guess, responding what he views as in kind, what was slated to be effective midnight tonight, a 25% tariff on steel and aluminum imports, which still is the case for every country it applies to beyond Canada, is now going to be a 50% rate for our neighbors to the north.
We'll see what the reaction is from Canada, because they have promised to retaliate at every turn. So we could really be in a bit of a spin cycle here, and really curious to hear what the president will have to say to the Business Roundtable. Kaylee, remember when he went there on the campaign trail, there were already concerns being expressed about tariffs and the impact it could have on inflation.
Yeah, some of those businesses represented by leaders at the roundtable could have direct impacts. Have already warned of that. Think Target, Walmart, auto companies like GM, for example. So it'll be interesting to see how the president resonates with those business leaders. Keeping in mind, we do expect some of those remarks will be on camera, which is also unusual for these this specific set of circumstances.
The White House trying to get out in front of this it may be the case. Joe Livornia is going to come on to talk to us in a moment. I'm really curious to hear what his mindset is right now and how we're explaining the impact potentially of tariffs. We haven't even gotten started on tax cuts, Kaylee, and we've got a market here that's looking for some answers.
Yeah, well, and we also should point out that the House is going to try to vote this afternoon to avert a government shutdown by Friday, and that by no means is guaranteed. So there's a lot to cover this hour, but we begin, as always, with a check on the markets, and Charlie Pellet has a look from New York. Hey, Charlie.
Hi, thank you very much, Kaylee, and good day from New York. We have got the Dow, the S&P, NASDAQ, very much in the red, just about the worst level of the day right now on the S&P, but do want to begin with this development. The Trump administration is preparing a new travel rule that would require Canadians staying in the U.S. for more than 30 days to register with the U.S. government and submit to fingerprinting. All of this on Trump Tariff Tuesday. President Trump doubling tariffs on Canadian steel and aluminum. Bottom line here, stocks selling off with the S&P down another 65 points right now, down 1.2%. We've got the Dow down 655, a decline there of 1.6%, while NASDAQ is down 134 for the NASDAQ Composite Index, a drop now of 0.8%. 10-year 4.24%, the 2-year currently yielding 3.89%. Gold up $28 the ounce, up 1%. West Texas Intermediate crude up 0.4%, 66.32 a barrel on WTI, and Bitcoin now up by 2.3%. Bitcoin at 81,153. So what about the American consumer? A couple of earnings reports may have some answers causing concerns. Dick's Sporting Goods down now by 5.7%, and we've got Kohl's stores plunging by 26% now after earnings. Recapping stocks lower, S&P down 71, drop right now of 1.3%. Balance of Power continues the Tuesday edition. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, keeping an eye on the markets for us. Thank you so much. As we know, the White House is keeping an eye on them as well. We got 2 separate statements from spokespeople for the White House yesterday in the aftermath of what was immense selling pressure, taking stocks down to the lows of well before Election Day. In fact, the worst day we saw on the tech-heavy NASDAQ 100 going back to 2022, with no real direct remark from President Trump. No saying, markets, calm down, my tariff policy won't actually be that bad. Instead, actually what we got today was a doubling down on the threat of tariffs, at least in the case of Canada, going from a 25% rate on steel and aluminum to now 50%.
And a promise to shut down the auto industry in Canada while he's at it, which we're pretty intertwined with here. These, as you mentioned, Kaylee, are set to take effect at midnight, would be along with all the other countries facing steel and aluminum tariffs. And a market that just doesn't know what to do with it. As we told you, the president will be speaking to the Business Roundtable a bit later on today. You were there when he spoke as a candidate. Very different world we're in, I'd say now, but the very same people who were expressing concern over policies like these will be there. And we're going to talk in a moment with Joe Livornia, of course, former Trump economic advisor. First, Laura Davison, Bloomberg politics editor, is with us at the table as we try to get our arms around all of this. It's good to see you, Laura. This is a president that was supposed to be obsessed with Wall Street, driven by the markets. Not so much this time around?
Well, at least right now, though it's clear that both he and his allies are very worried about what they're seeing in the markets. We didn't hear at all from the president yesterday. That's really unusual. Normally he comes out and speaks to the press at least once. Later today, he's set to to speak with a bunch of CEOs in Washington. We'll see, how that goes. The CEOs are very concerned about these tariff policies they see, and really the uncertainty of their, set at one level the next day, they could be doubled the next, repealed the final day. Nobody knows how to plan, and that's what's feeding into a lot of the market reaction we're seeing today.
Well, and I'm sure that is what business leaders would have to say to President Trump this afternoon, that they notoriously don't like uncertainty, nor do people who are trading financial markets. Do we have a sense of if this is going to be a two-directional conversation, Laura? Is he going, giving a speech, and leaving without hearing them out?
Generally, how these exchanges have gone in the past, there has been some sort of question and answer where CEOs get to pose questions to the president. Generally, this has not been in front of the press. Even staff is generally not allowed in the rooms. The idea is to keep these meetings very tight, though we have gotten some readouts from previous meetings. Back in the spring when he met, last spring, before the election, when he met with them, he said he was going to lower the corporate rate to 20%. I think we'll also see some questions from CEOs saying, hey, we're really hurting from these tariffs. When are we going to get these tax cuts?
Boy, I don't know what the message will be or whether even if we'll hear it, because this will be largely behind closed doors. From what we understand, that would be typical for the Business Roundtable. But every time Donald Trump goes on Truth Social, the markets kind of brace for what's coming next here. And we've got a CPI report tomorrow morning. We've also got a vote on a stopgap to keep the government running here. We've got a lot of plates we're spinning in the air right now. What's the communications office going to be doing at the White House in the next 12 to 24 hours?
They're clearly trying to spin this forward, saying, look, this is going to be just a period of, a little bit of unrest, but soon the market will figure out and decide that these policies are correct. I mean, this is really going to be the issue. If you've got donors, you've got other people who are already concerned. Businesses are cutting their forecasts, saying, look, we just don't know how to plan. Consumer sentiment is shaky. Small business sentiment is shaky. This is not just one bad indicator. This is a lot of bad indicators, and it's going to be very difficult for the White House to just talk their way out of this one.
Well, and I would imagine that's why the White House, through at least right now, Vice President J.D. Vance, who was dispatched to Capitol Hill today, are emphasizing extra that a continuing resolution to keep the government funded beyond midnight Friday is necessary to pass, urging no dissent.
Yeah, so we see the House, they've already decided they're going to vote today and then leave to try to jam the Senate. That could also potentially, throw a wrench into the system. It's really just not a good day to be at the White House. You have a lot of things that could potentially go wrong. And if, there is a shutdown, even a short one, or, we see, markets continue to fall, there's a bad meeting with the CEOs, all this could really just continue this tailspin.
All right, Laura Davison, Bloomberg Politics editor, thank you so much. And tailspin is one way to describe it, Joe, but what we're seeing is not just a down pressure on risk assets, but you're also seeing some specific language floating around out there, be it stagflation, people floating the idea that it's the end of U.S. exceptionalism, and increasingly the word recession seems to be entering the conversation.
That was the fallout from the weekend. That was why we were blaming losses yesterday on this, and it's still resonating. And I'll be curious to hear if the R word starts to emerge in more conversations with credible economists. It was really just a Sunday morning interview.
Yeah.
President didn't want to rule it out. That got us this far.
Well, it did emerge in one conversation between a former Treasury Secretary, Larry Summers, who sat down with our colleague David Weston earlier today and had this to say.
I think you have to say that there's in the range of, I'd say still slightly below, a 50% chance of a recession starting this year.
So let's see if our next guest agrees with that. Joining us now here on Bloomberg TV and radio is Joe Livornia. He's former special assistant to the president and chief economist at the National Economic Council during the first Trump administration. He's now chief economist and managing director for SMB Nikko Securities America. Joe, welcome back to Balance of Power. I don't know if you think recession odds are in the ballpark of being a coin flip here, but do you at least see greater risk of it now than perhaps before? It seems to be the prevailing wisdom on the street.
It's higher, Kaylee, than it was before, because it seems like this administration is actually going to be very serious to the extent possible in trimming government spending, which has been a huge prop to growth the last several years. So that does increase, if not recession, certainly a period of subpar growth. But that clearly would be a good trade-off for what would be a much more sustainable fiscal trajectory. The recession risk is not as high, in my opinion, as what Larry Summers just mentioned, but it is rising. That may be the price to pay, though, to get inflation back under control and to really rejigger the government's finances, which are really a mess.
That would, though, portend, Joe, and welcome back, a more optimistic view for the long term, wouldn't it? I know you're a chief economist and not a chief investment strategist, but what do you make of this visceral reaction on Wall Street, which is, of course, trying to price out where we're going to be 6 to 9 months from now?
Right now, Joe, thank you for having me again. Right now, this is a correction. And the market, S&P had been up 20% plus the last couple of years. The very narrow growth concentrated in a very select number of stocks. P ratio is very high. The equity risk premium very low. We had good growth last year. Unemployment was very low, but we ran a budget deficit to GDP almost at 7%. That's not sustainable. I am optimistic, very optimistic on the outlook because I see trend productivity, which started to recover rapidly under President Trump. It continued over the last few years. You've got this huge AI boon. We need to get capital expensing back full thrust to keep CapEx strong. So I'm very upbeat on the outlook. I think we're living remarkable times, but it's going to take some time. As the Treasury Secretary, I believe, said last week, we're going to be in a detox phase, and this is what we're living in right now.
Well, so if it is all about the outlook and what's going to happen longer term, Joe, usually markets being discount mechanisms that are forward looking would reflect what's going to happen in the future. It's not just about right now. Typically, they can look ahead to what's coming down the road, and that doesn't seem to be happening at this moment. Are the markets wrong, or is this side?
No,
please.
I think the markets are wrong. I mean, if you look at credit spreads, they've held in very tight. If there was real recession risk, we'd see much more stress there. The bond market tends to sniff that out much sooner. It tends to be much more accurate than the equity market. As I said, we had a huge rally in the equity market, and this is correction phase. Once the market gets clarity, and there will be clarity at some point, there will be a tax bill passed this year. The sooner, the better. That will provide clarity. Once we get a continuing resolution to fund the government through the end of the year, that will provide clarity. And as we move into April, after the April 2 reciprocal tariff dates, we're going to get some clarity on that as well. So I think, Kaylee, we're going to see the markets kind of congeal and sort of stabilize and eventually move higher if there's no recession.
Is Donald Trump a changed man here? Joe, you've actually had a chance to sit in the room. You ran the National Economic Council in the first Trump administration. You've talked about his view on the stock market, and that's always been the rap. He's driven by the markets. He kind of measures his success by the markets. But now we're talking about a drug war, not a trade war, and a different set of principles. And there are new questions about whether he cares about this market reaction. He said just a couple of days ago he hasn't been watching it. What do you think?
He definitely cares about the markets, but Joe, really is, where is the stock market? Where is the economy in 12 months, 24 months, 48 months? Where are we over the next handful of years? As you know, from following markets, I've been doing this for a long time, people get nervous and they tend to overreact. There's people, I think, right now are being way too emotive. The president certainly cares about the markets, cares about Wall Street, but cares more about Main Street. And it's his strong view that eventually we're going to bear significant positive fruit to Main Street, because that was the case in his first administration when you had roughly a 6,000 increase in median real family income, which was about 6 times what had been the prior 16 years. So the president cares about these things, but as I said, this is going to be an adjustment, a reset process, and the market ultimately will see in a positive light despite the volatility we have right now.
Well, and it doesn't seem that the market is only paying attention exclusively to what the president says, Joe. You can also look at what we're getting out of corporations, warnings from retailers today, from airlines about waning demand or the impact of tariffs. The business community does seem to be signaling that there is going to be an impact, certainly on their bottom lines, but as they see shifts in consumer behavior. Some of these very same business leaders could be in the room when the president addresses the business roundtable this afternoon. What do those leaders need to hear from him in order to restore business confidence and consumer confidence?
Well, let me say that the business confidence, if you look at the NFIB, we had the data today. Yes, you had a big increase in uncertainty as it relates to tariffs. And of course, the tax bill, let's not exclude that, because to me, the tax bill, the uncertainty whether those tax cuts get extended is very important. But small business confidence is very high, still over 100. I mean, at the corporate level and where earnings come in, that was a function of the economy prior to when the president came in office. Clearly, CEOs are worried about the outlook, but these tariffs really have not been fully put into effect yet. We don't know exactly what the impact is. And to the extent there will ultimately be higher tariffs, I do think there'll be some level of higher tariff than what we had. if it comes at the expense of the continuation of low marginal rates, a reduction in corporate tax rates, lower tax on tips, overtime, and Social Security, that is, to me, is a very good trade-off. Those supply-side initiatives, I'd argue, would offset any weakness that people are worried about on the demand side, which I think too often maybe corporate America focuses too much on short-term demand and not long-term sustainable supply innovations that keep productivity and living standards ultimately higher.
Question from a listener on the terminal here, Joe. What's the end game with the tariffs? Is it to strike a deal on a so-called Mar-a-Lago Accord? I guess to maybe expand on that a little bit, is there a grand scheme here that maybe the market doesn't know about? Or is Donald Trump riffing every day, throwing stuff at the wall to see what sticks?
No, they're definitely no. If you look at how many executive orders there have been, it's been unprecedented because the administration clearly had a very strategic view of what they wanted to accomplish when they came in. I believe they know what they want to do on tariffs, but they're not going to say it publicly because that is negotiation, and you wouldn't tell people exactly what they're doing. And I have to think that ultimately there will be some sort of deal. The president's very transactional. He's got very good business sense, very good business skills, and there will be some resolution. But what it looks like, Joe, I don't know. But ultimately, the benefit is going to be geared toward the U.S. performing well, and that's how President Trump ultimately will be measured. Where are we 4 years from now? Where's the equity market? Where's the unemployment rate? Is the inflation rate back down well below 2% as it was in his first term, or is it up near 3%? All those factors will come into play, and I think too often we want results too quickly. We're too impatient. And, it's only March. We haven't even finished the first 100 days yet. And here we're talking about losing U.S. exceptionalism. I think that's that's too much doomsday.
Well, Joe, we could add to that list potentially in terms of where the unemployment rate is or what have you, also where borrowing costs are, what the average 30-year mortgage rate is. What does all of this conversation do to your expectations around where monetary policy will change?
Right now, I see the Fed on hold. I do think rates ultimately will move lower, getting rates ultimately probably down to 3%, maybe a bit less. That assumes an economy that's growing at roughly 3%. That, Kelly, would take the 10-year note on a sustainable basis to around 3.75, maybe 4%, so lower. We'll have a steeper curve at lower yields. That would also be consistent with an inflation rate around 2%. I mean, the world that I envision is one that is very similar to what we had prior to the pandemic. GDP growth around 3%, low and stable inflation, very low and stable unemployment, and a very strong equity market.
Joe, it's great to have you back. We'd love to compare notes once we understand how this conversation went at the Business Roundtable. You're always welcome here. Of course, former special assistant to the president in the first Trump administration, chief economist, National Economic Council, now SMBC Nikko Securities America. Really interesting, Kaylee, as we try to feel our way through this with so much uncertainty in the air and a market that's pointing lower.
Yeah, and of course not for the first time. It has been a pretty brutal several weeks, and yet no direct comment on that from the president, at least at this point, beyond saying yesterday he's not looking at the stock market. I think it's hard not to be looking this week.
That's true. I guess I'll need to say something a little bit later on. We'll assemble our panel next. We've got an important vote in the House today to try to keep the lights on this weekend. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are in the red. The Dow, the S&P, NASDAQ all declining. In fact, very close to session lows now on the S&P 500 index. President Trump says he is increasing the steel and aluminum tariff on Canadian goods to 50% to retaliate against Ontario's move to place a levy on electricity imported from the U.S. The S&P is now down 76. That is a drop of 1.4%. The Dow down 683 for the Dow, a decline of 1.6%. The NASDAQ Composite Index down 187. For NASDAQ, a drop now of 1.1%. We've got the 10-year yielding 4.22%, with the 2-year currently yielding 3.88%. Gold up $28 the ounce, up by 1%. West Texas Intermediate crude up 0.4%, 66.31 a barrel. And Bitcoin holding on to a gain of 2.5% right now at 81,271. American Airlines and Delta have both issued a warning shot about the U.S. economy, suggesting consumer spending has pulled back sharply as economic worries have ratcheted up. American Airlines shares, they are down 6.7%. Delta, which wore last night, down now by 8.4%. Recapping, stocks lower, S&P down now by 79, a decline of 1.4%. Balance of power continues now. Back we go to Washington. Once again, your hosts. Here they are, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. Here in Washington, an important vote set to take place just hours from now in the House of Representatives, where a continuing resolution that would keep the government funded through the end of the fiscal year, September 30th, is set to hit the floor. The thing is, Republican leadership is not counting on any Democratic votes for this measure, which means they have to keep basically the entire conference together on this one because there's only so many votes that they can afford to lose, presuming that you have attendance that is as expected on both sides. The thing is, though, Joe, already you have one hard no, likely unchangeable no in Congressman Tom Massey, the gentleman from Kentucky who is now being threatened with a primary challenge by President Trump. But there's others, too, not necessarily taking as hard a line as Massey on this, but saying at this time, even after meeting with the Vice President J.D. Vance on the Hill earlier today, they remain undecided on whether they're going to vote for this.
Similar names we've been hearing: Burchett, Crane, McCormick, Ogles, Gonzalez, and about a half dozen here on the fence. So I suspect that the phone call will start coming in from the White House soon, unless, of course, the strategy is to bring everybody on the floor and dare them to vote no.
Yeah, which we have seen in the past, mind you, when they were trying to pass their budget template, which is setting the stage for the reconciliation battle that still has yet to come because we have so much to look forward to. They let everyone leave the floor, then called them back immediately, and suddenly the votes were there.
13 minutes later.
Pressure's an amazing thing.
Well, we heard from the speaker a little bit earlier, of course, Kaylee speaking optimistically about these holdouts. Here's what he said.
You can all read the bills, 99 pages. This clean CR contains no poison pill riders, no policy riders there at all, no cuts to Medicare, Medicaid, or Social Security, zero, no cuts to veterans benefits, zero. In fact, as was noted, we plus up the accounts for veterans.
Wouldn't want to be Tom Massey today. I can only imagine the emails and phone calls Donald Trump takes to Truth Social, referring to him as a congressman with quotation marks. I won't read this whole thing. It's another long one, but he says Thomas Massey is a grandstander, and the great people of Kentucky are going to be watching a very interesting primary in the not-too-distant future. If you're with us on Bloomberg TV or YouTube, you can take a read yourself as we assembled our signature panel. Rick Davis is here, Republican strategist and partner at Stone Court Capital, alongside Jeannie Shanzano, our Democratic analyst, senior democracy fellow with the Center for the Study of the Presidency and Congress. What do you think, Rick? Does the pressure play work? Does this pass?
Well, I think they're beyond pressure with Tom Massey. Now it's just recrimination. Yeah. And we have to look at the history, and every time there's been a big vote, even before Donald Trump was elected, when he intervened, he changed people to his position. So my guess is he'll get what he wants out of this. And frankly, he should, because, I mean, the reality is this is much to do about nothing. We got to keep the government floated financially. This is insane that we're even having a conversation about a full year CR. It is an indictment on Washington. You can't pass appropriations bills. You can't set policy. They should all turn in their paychecks for last year. It's just amazing. But that's where we are. It should be non-controversial. And I think not only will the House pass this bill, but I think the Senate's lined up to do the same.
Well, and typically we've seen, at least in recent years, not only is this, it's always controversial, but at the very least it can be nonpartisan or a bipartisan effort, Jeannie. Typically Democrats do support or provide the votes needed to keep the government open when it counts. They have signaled they are not willing to do that this time. At least leadership has signaled that. And I do wonder if you expect every Democrat to stay in line with Hakeem Jeffries when this thing goes to the floor, if there could be some breaks to his guidance.
There may be some breaks. I mean, he has really been whipping a hard no on this. And of course, for Democrats, they had no input on the bill. And the clip you just played, we heard Mike Johnson talking about how this is a clean CR. Well, almost clean. It's not quite clean, according to the Democrats. And in particular, the fact that it does give the executive branch more discretion, the federal government, to spend money. And that, of course, is a non-starter for the base of the Democratic Party, very concerned about an emboldened Doge. And so it's not clean from their perspective. But I do think most Democrats will stick with Hakeem Jeffries. But I agree with Rick. In all likelihood, this gets through the House. At least that's been the record. Mike Johnson seems to go right up to the line and then they pass. And if they get out of town, I think the Senate will be able to avoid a filibuster, which means you're going to need to see about 8 Democrats go over. But I just think it's hard at this point for Democrats to imagine shutting down the government. That said, this is going to be very tight. And a lot of this depends, for instance, on things like who's actually present today when they call this vote, which it looks like will be later this afternoon.
We've been talking about the stock market here quite a bit for obvious reasons over the last couple of days, including this one. And we can tell you the headline just crossed the terminal. The S&P 500 set to enter correction territory after falling 10%. That, of course, being the definition from the record high. And Kaylee, it follows some commentary from the press secretary being asked about this, as you would suspect, a snapshot of a moment in time is how she describes the market.
After saying that we're in a period of economic transition, very similar language to what President Trump said in that interview on Sunday Morning Futures that ran over the weekend, in which he refused to rule out a recession. Noteworthy, though, to now be speaking about the stock market as a snapshot of a moment in time, compared to the language about the stock market we heard in the first Trump administration, perhaps Trump's language about the stock market when President Biden was president. It does seem like there is a bit of a tone shift underway here, as we're seeing equities obviously taking tariffs on the chin, not just a 10% correction territory now for the S&P 500, but the NASDAQ is already well below that territory.
S&P 500 down 83 points right now, by the way. We're down 1.5% at the moment, and a bit of a fit here after Donald Trump made that post on Truth Social. There was talk of a recovery today, and that has obviously gone out the window. Rick, when you add the uncertainty over government funding, over the debt ceiling, over Trump tax cuts, how important is this vote today for the view of the market?
You know, look, it's a confidence building exercise. They can't really do any good with this. They're not like showing fiscal responsibility. It's a CR. It's just a kick the can funding mechanism. But if it doesn't pass, it's a huge problem. So they're not going to get any credit for doing the coward's way out. But they will get blamed if, for whatever reason, something this benign doesn't get passed. And I think Democrats and Republicans take it on the chin. They will both get blamed by the market, because we'll enter this period of political instability that we've seen in the past, where you can't make business decisions based on the political instability of the system in Washington. And I think that's what today's all about, is avoiding that appearance. Last thing we want is Moody's looking at the federal government and saying, you know, potential downgrade because they can't get their act together. I mean, that's like a horrible indictment on the system and the people in it.
Well, and I guess the White House is very much trying to read the market activity as not being an indictment of the president's policies. But Jeannie, the suggestion from the press secretary that what financial markets are reflecting right now, or where stock market levels are, is just a moment in time. Are you surprised by this language coming from the White House, given how previously they've talked about the stock market? Just weeks ago, President Trump was touting stocks at record highs.
Yeah, I am so surprised. First of all, they obviously haven't been listening the last couple years when we raked Joe Biden over the coals for using the term transitory. And to me, a snapshot is very much just a synonym of transitory. And the other thing is that, you know, right before his inauguration, Donald Trump went to the arena and he talked about, with great celebratory, sort of, look at me, look what all I've done to the market. That's all been wiped away. And now they're saying, well, it's just transitory. This to me is quite stunning from a man who typically likes to tout the crowds, likes to tout the strong numbers, who ran on making America affordable again. And all I can just imagine is that this explains his silence over the last 24, 48 hours, except for his truthing against Canada and about Elon Musk. He has been suspiciously quiet, and we have to wait to see what he says to the roundtable. But the communication strategy here from Donald Trump speaks volumes, because it's not like Donald Trump to be quiet.
Well, we got a couple headlines coming out of the press briefing, Rick. Before our global television audience joined us, we were talking about Donald Trump's post on Truth Social after midnight in which he pledged to buy a Tesla to help support Elon Musk, who he says is under great distress here and being criticized by the other side. Press secretary says a Tesla is on the way to the White House now, remembering Donald Trump was gifted a Cybertruck on the campaign. I mention this, Rick, because Elon Musk is a big factor here, and I wonder the extent to which you see him playing into the uncertainty on Wall Street. How much of this is tariffs versus the rest of the DOGE policy and the cost-cutting efforts in this White House?
Well, there's no question that Elon Musk is taking the brunt of the downsizing the federal government argument for those people who aren't happy with what they're seeing, right? I mean, it's just actually amazing how much Elon Musk has been this tip of the spear on a policy that Donald Trump's been talking about for almost 10 years. And so that's been a huge help to Donald Trump. The fact that he doesn't have to take all the barbs, he doesn't have people at the town halls screaming his name to Republican office holders about their unhappiness is a huge advantage. And honestly, this is a part of Donald Trump's kind of attractive. Does he actually care about Elon Musk's feelings and the fact that being hurt because he's thrown himself into the political fray in Washington? Look, put on your big boy pants and go to work. There are things to be done in Washington, and you shouldn't have to buy someone's Tesla to make them go into the office in the morning. Come on, let's get our act.
Well, Rick Davis and Jeannie Shanzano certainly showing up for work today, joining us here on Balance of Power, our signature panel. Thank you both so much as we keep one eye on domestic politics, another on geopolitics with U.S. and Ukraine's talks underway in Saudi Arabia. We'll have more on that in just a moment as we also keep our third eye, I guess, on financial markets. The S&P 500 touching into correction territory. We'll have a check on those for you on the other side of the break here on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Lows of the day, and the S&P 500 index moves into correction territory. The Dow, the S&P, and NASDAQ all in the red right now. 77-point drop on the S&P 500 index now stands at 55.37. That is a drop of 1.4%. The Dow down 676, a decline of 1.6%. And NASDAQ right now down 185 points. NASDAQ down by just about 1.1%. Correction, by the way, described as a move of 10% below a recent high. 10-year, 4.23%. The 2-year, 3.88%. Spot gold up $28 the ounce, up by 1%. West Texas Intermediate crude higher now by 0.3%. And Brent up by 0.4%, 69.54 a barrel. Bitcoin up 2.2%, 81,038 on Bitcoin. We'll have a whole lot more on the markets for you coming up in just a moment with our Mike Regan. So again, recapping here, we are looking at lows of the session right now. S&P 500 index down 75, a decline of 1.3%. Your 10-year, 4.23%. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Keeping us up to date on the trading on this Tuesday, which initially we thought might see the start of a rebound after the brutal selling pressure that rippled across U.S. equity markets yesterday. And instead, a true social post from President Trump raising the planned tariffs on steel and aluminum for Canada specifically to 50%, set to take effect at midnight, seems to have sapped risk sentiment all over again, and dip buying doesn't necessarily seem to be materializing at this moment as we look at correction territory on the S&P 500. So for more, as Charlie promised, we go to Mike Regan, Bloomberg senior editor, who is joining us from New York. Mike, at what point is this just the selling pressure kind of amplifies itself and we're looking at technical levels here and kind of algorithms kicking in, or does this still seem to be active decision-making on the part of traders to trade off of what we're hearing from the president?
Yeah, Kelly, I think my guess is that it's a little bit of both. From a technical perspective, if you look at the chart of the stock market, it's really just a classic downtrend since the last high in the S&P 500 on February 19th. So, that trend until it's breached, and it looks like, it's broken that downtrend, technically minded traders are going to be a little bit nervous about what this market looks like right now. The S&P is below its 200-day moving average. First close yesterday in a long time below that average. That's another signal to technically minded traders that, this sell-off is not your classic, sort of minor correction, that it is potentially something more serious. But as I was saying earlier, I would also point out that, this has kind of gone beyond just the headlines from Trump and his posts on social media and his comments about tariffs. We are seeing companies themselves, Kohl's today, Dick's Sporting Goods, really giving sort of alarming forecasts for their profit in the rest of the year that is really catching investors' attention, and those stocks are down pretty significantly. It really looks like it's being translated from just sort of tweets and posts from Donald Trump and sort of confusion about tariffs to actually what looks like to be the start of damage to corporate America's profitability, in part because obviously if you fire a lot of government workers, that's going to reduce some consumer demand, and it makes other consumers nervous. It makes companies confused about how they should respond to these tariff threats. So, it is getting beyond just sort of the headline risk and the social media post risk from Donald Trump into something more serious with these companies warning about their profit forecasts. Kelly.
I just wonder, Mike, what capitulation looks like here. You've got a VIX bumping up against 29 now. And we heard another call this morning, 5,500, much like we heard from Mike Wilson at Goldman Sachs, JP Morgan Asset Management's David Leibovitz. He says it's time to start writing a shopping list. Mike, when do we know it's time?
I think, Joe, I'm not sure that that's consensus, that this is a dip that is to be bought at a certain level. We have seen other strategists being much more cautious. So, it's hard to really say where the bottom of this is. I think what Wall Street really craves now is a little bit of a softer tone from President Trump on the tariffs. And not to mention all of the other, the cuts in spending, all the DOGE cuts being made and the firing of government workers. A lot of this is adding up to real concern about the strength of the consumer for the rest of the year. So I'm not sure it's one of those sort of dips that reaches a level where, you see this knee-jerk response and people start to buy into it. That certainly could happen. But I think this correction, this sort of drawdown from the highs is likely here to stay for a while until we learn more about how aggressive President Trump really wants to be with these tariffs. He's very flexible and sort of tends to change what he wants to do with tariffs quite a bit. And I think what Wall Street's really coming to grips with right now is that this correction in the stock market is not yet enough to really change his mind about trade policy and all his other policies. So, I think this drawdown is here to stay until there's more clarity on exactly, where the line in the sand is for Trump as far as how aggressive he wants to get with tariffs and with, cutting government spending and the job cuts that come along with it.
Mike, we can't thank you enough. Mike Regan, Bloomberg senior editor, super helpful these last couple of days, and we might need to stay close on this, joining us live from world headquarters in New York. Of course, Kaylee, we're going to be watching the meeting, the Business Roundtable, after the closing bell, 5 p.m. Eastern Time. Donald Trump will hold forth with some pretty important executives who have already, upon his last visit as a candidate, expressed some concern about the impact of these very policies we're talking about, tariffs, tax cuts put together.
Yeah, we're looking forward to hearing, hopefully, from the president in the 5 o'clock hour in the late edition of Balance of Power. And I would also keep in mind we're actively waiting to hear from the Secretary of State, Marco Rubio. He's been expected to gaggle with press gathered in Saudi Arabia with U.S. and Ukraine talks now underway. It seems those talks have been lasting for an extended period of time that has delayed those remarks. But of course, we're eager to hear what the secretary has to say as the U.S. is suggesting both Ukraine and Russia are going to have to make some concessions here.
That's right. Secretary of State Marco Rubio in the room. Mike Waltz back there. Steve Witkoff as well. Our producer James told us they're about 9 hours in. James, is that correct at this point? They still have not emerged. Wanted to talk to Mara Rudman about this. This is obviously, it could be a pivotal meeting here. Professor at the University of Virginia's Miller Center, former U.S. diplomat with us back here on Bloomberg. Mara, it's great to see you. Does the length of this meeting, the fact that it's going into overtime, encourage you?
Well, I think it's better than if it was an abrupt meeting. There's certainly a lot to talk about. And in Mike Waltz and Secretary Rubio, you have serious thinkers who understand the ramifications of what the president and others have put out there. And so I'm hoping that this could be a sign that there are serious discussions underway and recognizing that all parties involved are going to need to be able to state clearly what their bottom lines are. And it's particularly tough for Ukraine because all of the negotiating is literally going on their territory or about their territory and about their sovereignty, which puts an added burden on them, which I certainly hope that Secretary Rubio and Mike Waltz understand and appreciate why U.S. interests are so at play here in terms of protecting Ukrainian sovereignty.
Well, we do know this came up in the White House press briefing just a moment ago as the press secretary, Caroline Leavitt, says that the president has received positive briefs about the meeting so far today and that they'll have a full readout later on. But Mara, to your point about Ukrainian territory being in question here, what Russia is going to be able to keep hold of versus what Ukraine may be able to claw back, how do you see the minerals deal that the U.S. still seems intent on signing with Ukraine factoring into that, knowing that where a lot of that material actually is in territory currently occupied by Russia? Does that actually give Ukraine some leverage via the United States?
Hard to say. I suspect that the United States has also been talking to Russia on the minerals topic, and it's understandable for any U.S. administration to recognize that the United States needs to do far better in building and protecting a resilient critical mineral supply chain. I don't happen to disagree. I don't happen to agree with how this administration has gone about making those claims or assertions, but I expect they're having conversations with both Russia and Ukraine. For Ukraine, what's most important, and President Zelensky's chief of staff has already stated that publicly, is the need for security guarantees from the United States with whatever Ukraine may put on the table, in addition to their openness on the critical mineral side.
There was talk of signing that deal at this meeting. Mara, is that your expectation?
I guess I would be surprised if a deal was signed at this meeting. Certainly, you've got the Ukrainian defense minister there and the foreign affairs minister. So maybe it's possible, but I wouldn't expect that coming out of a discussion like this, particularly because the Ukrainians still need to know where the Russians are and what the Russian bottom lines are here, and we've heard very little discussion of that publicly.
Well, one of the Russian bottom lines we understand, which goes back to the point you were just making about security guarantees, is that there will be no presence of NATO troops in Ukraine to keep the peace, which is something that France and the UK have offered, the so-called coalition of the willing. If it can't be the Europeans, Mara, who realistically could serve that peacekeeping role?
Well, I should say, and it is important that France and Britain have offered to do that. They also want to know the United States is there as a backup. So what the United States is willing to do and how is critically important. Russia has already shown time and again, frankly, that they will take all that they can take, and that their word means very little, that you have to, those on the opposite side need some backups of force, and they need the strength of the United States there to ensure that Russia complies. And that's why it's so important that the United States indicates some willingness on the security guarantee side, and also in supporting what France and the UK have put forward in terms of on-the-ground peacekeepers.
Does President Zelensky need to come back to Washington, sit down with Donald Trump, get back in the Oval, smiles on their faces, saying thank you, and so forth, to get this back on track or to move the ball forward?
I would hope that for the United States and for this administration, our keen eye is on what how to best serve U.S. interests and how to best protect U.S. national security. And that shouldn't be by requiring a formula of magic words to the President of the United States to make him feel better. His job should be in looking out for U.S. interests writ large. And so getting the deal done that best serves U.S. interests should be through whatever route we can get that deal done. I hope that is part of what Mike Waltz and Marco Rubio are trying to figure out and assess in their negotiations, in their discussions now.
Well, do you think that President Trump, though, is of the belief that a stronger, better fortified Western Europe is actually in the U.S. interest, considering when we've heard him talk about European allies, frequently he's talking about that, yes, they have not spent enough on defense, but also that he views them as kind of economic adversaries in the sense who have unfair trade relationships. He's threatening them with tariffs while all of this is going on, Mara.
Yeah. Listen, my concern about President Trump is that, at least in all of the public statements he's made thus far, he seems much more eager to cozy up to strongmen and other authoritarian leaders, and to work out deals with Russia and China, for example, while the rest of the world needs to just scramble around the margins. I don't think that's what serves the security interests of the United States, nor obviously the rest of the world. But that's my concern about him. So yes, that's completely consistent with the view that he doesn't recognize the importance of friends and allies and partnerships that the United States has worked so hard to cultivate and ensure over the last years. I hope that there are people around him who are trying to correct and adjust that view and work with him to have him understand the importance of these relationships.
All right, Mara Rudman, professor at the University of Virginia's Miller Center and former U.S. diplomat, joining us here on Balance of Power. Thank you very much. And again, to reiterate, we did hear from the White House press secretary that the president has received positive word from these talks so far in Saudi Arabia. Full readout expected later, as well as potentially remarks to the press from the Secretary of State, Marco Rubio.
Yeah, we'll have quite a bit more to talk about when we get back on the air at 5 p.m. I hope you can join us on the late edition of Balance of Power as we track a couple of storylines here this this meeting, of course, in Saudi Arabia. Donald Trump's meeting, the president going to the business roundtable right as we take air, following the closing bell today. And then, of course, a 4 p.m. vote on a stopgap to keep the government from shutting down on Friday. That happens in the House, Kaylee, and we have no idea how that's going to end.
No, we don't. The votes don't seem necessarily to be firmly there at this point. And of course, the backdrop to everything Joe just said, financial markets that are still under pressure today. We're off the lows on the S&P 500, but it did touch into correction territory, and they'll have that covered for you on Bloomberg Business Week, which is just ahead here on Bloomberg TV and radio.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week for this Tuesday, March 11th. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters. And yeah, it's happened. We did see the S&P 500 going into a correction.
Yeah, the Mag 7 trade also sputtering. This amid President's latest trade war salvo. We're going to have more on the trade in just a minute, Carol, but I'm looking at a chart of the S&P 500. from its all-time high just last month. Down 9.7% just in a very short couple of weeks.
Yeah, kind of interesting. We are off our worst levels of the session, but we're going to get more on the trade in just a moment. Hey, our focus in the next 60 minutes, the day after for stocks, a valuation reset, question mark, a bounce back that fizzled. Yes, we saw that. We're going to try to make sense of it all and really separate the noise from the fundamentals. We'll get to that just shortly.
Plus, after the markets closed yesterday, Carol, you and I saw this headline cross from Delta, a sign of consumers pulling back as airline stocks dip after two of the majors now have slashed their forecasts. We're going to talk all about airlines with George Ferguson.
We are indeed. Also, tough economic times for longer-term gains, something we've heard from the Trump administration. Does it work? We're going to talk about that.
And from icons, menus, and apps to Windows and system buttons, a major software overhaul coming from Apple. Yes, it's actually happening. Mark Gurman with the report out just yesterday.
Are we going to like it?
That's a question for Mark. I got no idea. Nobody ever likes things changing. That's kind of the way it goes. But Apple says you got to do it, so we're going to do it.
All right, we're going to talk about that over the next hour. Hey, guys, let's get an update on the market trade for you on this Tuesday. Here is Charlie Pellet.
All right, I thank you very much. We'll call it Trump Tariff Tuesday because we got stocks extending their 3-week decline to around 10% amid an escalating global trade war. The S&P 500 index is declining now by 57 points. Yes, we're off session lows, but the S&P still at 55.58, a drop now of 1%. The Dow is down 577, lower by 1.3%. NASDAQ down 71, drop there of 0.4%. The 10-year, 4.24%. The 2-year, 3.89%. Gold is up 1%, now $29.17 the ounce, up $29. West Texas Intermediate crude, 66.07, little changed on the day now. And Bitcoin up by 3%, 81,677 on Bitcoin. President Trump says he is increasing the steel and aluminum tariff on Canadian goods to 50% to retaliate against Ontario's move to place a levy on electricity imported from the United States. After earnings, we do have Kohl's and Dick's Sporting Goods shares both trading lower, adding to the flood of companies raising concerns about the American consumer. Kohl's shares, they're down 6.7%, down to 25.9%. It is Dick's Sporting Goods down now by 6.7%, and to be clear, Kohl's plunging 25.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Safe to say you had a lot of choices when it comes to decliners today.
I haven't even chosen. I got like 6 on deck right now. I'm still going to make some final decisions when it comes to stocks that are moving for my decliners today, Carol. But you were kind of in a tough spot with looking for stocks in the green.
I did kind of reach out to you. Hey, got any that are on the that are actually gaining? Hey, we should point out 390 names in the S&P 500 are lower today, 112 to the upside. Look at those 11 major industry groups in the S&P 500. Tim, all of them are down. The best performing major industry group, information technology, up about 0.4%. And then industrials are at the bottom of the pack, down almost 1.6%. But all of them are down, so some broad-based selling.
Okay, to be fair, we do see 57 stocks making new 52-week highs today, 321 hitting 52-week lows.
Interesting, right? So digging a little bit deeper. All right, we mentioned all the major groups in the S&P 500 are falling today. The benchmark gauge extending a slide from its all-time highs at 1.